All right, perfect. So, yo, what up for you guys watching this on the YouTube replay? I got a really good one for you because I want to start the stream off by going over this one stock that I really like, and it's one that I'm pretty sure I'm about to buy the dip on this stock right here. And I'll show you the stock that it is right after I do a quick portfolio update. As you know, I got three different portfolios here. Like this one right here, this is my buy and hold portfolio where once I buy a stock in here, I try and just hold it on for the long run. Here's my growthy portfolio. This is my Webull account. We got a lot of high growth names in here. We got some winners and some losers in here. T-Mobile's one of my most recent purchases. I actually just made a TikTok video about that if you want to check that out. And I want to show you also my Robinhood portfolio. This is my main taxable buy and hold account where every stock in here is in the S&P 500 and also every stock in here pays a dividend. Luckily, we are up on every single holding in here. Also, I have a small Roth IRA. And hey, check that out. We started it pretty much exactly a year ago, but we're up 15% all time in here, which is pretty cool. So the new stock I want to introduce you to that I found very interesting, and it's a small one. You definitely don't want to have this as a huge position because of the market cap. But I want to give you a pitch for this stock and potentially put this stock on your watch list right here. I'll take a minute or two analyzing this, then we'll look at some of your stocks in the chat here. And I have another stock later I want to show you. So this is Delcath Systems. If you look in the top right, the market cap, they're a $394 million company. So remember that the whole company is only worth 400 million. But here's why I am really thinking about buying this stock right here, because of the growth that they have. Literally, the revenue is up 530% from the previous year to a new record. Now it's only 20 million, but the market cap's only 400 million. And the best part is they're profitable on that. And that's real operating income. So that's real net income they made. They made $1 million in the most recent quarter. If they can literally just make $1 million every quarter, which is, 4 million a year, the whole market cap's 400 million. This is potentially, what's the forward PE actually on this? Yeah, so the PE isn't too accurate. But anyway, let me also show you this. So the growth is insane. And look at this balance sheet right here. They actually have no debt whatsoever. So if you go to the balance sheet right here, this is kind of another cool part. They're a $400 million company with $58 million of cash. It's on the left there. They have nearly $59 million of cash. And if we go to total debt, look at this. They just paid off all their debt. So on the bottom left now, it's literally zero. They have no debt at all, $58 million of cash, growing like crazy, making net income, and the whole company's on over 400 million. So this is one I'm potentially adding to my watch list as one. If it stays lower, it goes a little bit lower, I'm definitely probably going to be buying this one next week. Again, not financial advice here, but yeah, that's Delcath Systems. That was a little more financial analysis than I normally do on a stock, but that's a really cool one. Another one right here. This is Sezzle right here. Ticker symbol SEZL. Maybe you've heard of it, maybe you haven't, but this is a fintech right here, and they've been kind of falling off a cliff the past couple of days here. And actually, I want to go analyze Sezzle on this app over here because it might give us a little better analysis. So let's see. Sezzle stock right here. This is a fintech, kind of like a Dave stock. But check this out. The growth has just been incredible on this company. Actually, it'll look better down here. So look at this. The revenue is up over double. It's at 100 million now. So the revenue is up 123% year over year. And if we go to the net income, they made $36 million of net income on only 104 million of revenue. So that means they're really growing their net margins. I mean, that's a crazy margin, a 34% net margin just in the most recent quarter. This is why this is another company on my watch list. They also have an incredible balance sheet. They're deleveraging. Yo, what up, Bri? What up, Brian as well? He said Bull and Nike stock. Yeah, what up, Rocks? We'll check out all these stocks. I got you. So yeah, Sezzle is another one that I think you should add to your watch list in case it falls a little more. Yo, Haniel, what's up, brother? Good to see you from the Discord. So someone said ticker symbol BULL. So this is I don't know what I clicked. There we go. So this is Bull stock. They just IPO'd, and the IPO was crazy. Look, they went up to like $79, and now here they are right now at 12. And basically what happened was a couple days ago, the reason they gapped down, they basically diluted the shareholder by $1 billion. No big deal. I like that this company's profitable. So they're a $6 billion company, not huge. And by the way, if you're wondering, what is Webull? What is this stock we're looking over? It's just this app right here. This app right here is publicly traded. And, I've probably given them a lot of fees. I have an account with them, but they're basically like a Robinhood. And if we go to the net income right here, good news, they did make net income in the two most recent quarters. So that is something that I do like to see. And what's the revenue growth? The revenue is up 31% year over year. Not too bad. But I do got to do some more research on them. They did just IPO, and only like 7% of the shares are like available to trade. What are your thoughts on silver sitting? What up, Matthew? He said, what are your thoughts on silver hitting a new high since 2011? Yeah, it's like all the pressure, like gold, silver, Bitcoin, that's like the huge winners right now because it's like an inflation hedge, war hedge. It's like the perfect environment to like be holding those assets. It's kind of tough to buy them now at all-time highs, but so someone said Nike stock. So I feel bad if you own this one. Actually, it's done pretty decent on this earnings right here. The earnings wasn't good, but it priced in like the earnings were terrible, but it's like the worst is over for Nike, and that's kind of why they had that relief rally, which is good news. So I did actually sell out of Nike. I sold all my shares up here at $79. Now I don't I don't think I'm negatively biased, but here's why I sold out of them. The fundamentals are starting to decline a little bit. Yeah, we'll look at APLD. That one's owned by NVIDIA. So look at Nike's revenue. Like, I'll analyze them the way I would any other company. The revenue on Nike is down 12% from the previous year. If you go to the net income, it's down 85% from the previous year. So if we go to the net margin, it's just a 1.9%. The margins have collapsed in Nike. And also, they can't afford the dividend. So their dividend cost 40 cents of EPS a quarter, all right, 40 cents of EPS. They only made 14 cents. They couldn't afford the dividend this quarter. So if they stay in this kind of low net income level, it's really tough on their dividends. So, hey, what up? Ishwar said Lockheed Martin. Yeah, we'll look at and then we'll look at APLD after this. Yeah, that's in NVIDIA's portfolio. Oh, yo, T-Mobile as well. Earnings on the 23rd. Yeah, I can't wait for that. So here's Lockheed Martin. This is like an aerospace and defense company. And we'll just look at where the revenue comes from. I like how diversified that this is. First of all, it's not just like all from one stream, rotary mission systems, missiles, and space industry. So I like how diversified that they are. And look at the net income they're making. Oh yeah, this is a dividend play. Check this out. You get a near 3% yield on Lockheed Martin. So, and if we go to their net income right here, they kind of had a one-time adjustment last quarter because look, they're always making 1.5, 1.7 billion in net income. So Lockheed Martin's one I do like. It's an aerospace defense play, and I think it deserves right, especially in this environment, a small portion in the portfolio to aerospace. So someone said APLD stock. So if we go to NVIDIA's portfolio right here, because NVIDIA is so big that they literally own some individual companies. Like they own CoreWeave, ARM, and the third largest holding is actually APLD. So check this out right here. APLD, they just partner with CoreWeave. I can kind of see NVIDIA orchestrated that. CoreWeave, APLD go into a huge partnership. That's kind of orchestrated by NVIDIA, I could tell, because NVIDIA owns both. So NVIDIA does own part of this company. I like showing you the numbers for yourself, so you can draw your own conclusion. But look at this cloud service business right here, just the growth of this. It's literally up from the previous year, 219%, at this crazy growth rate. What's it going to be this time next year? So I do really like the growth on APLD, and they just went into that huge partnership with CoreWeave. They are kind of bear flagging right now. Maybe Spread the Wealth in the chat here. He's good at stock analysis, can tell me. But hey, what's up, dude? Yes, yeah, I do like APLD. They are losing a bit of money, but I think they'll kind of grow out of that. All right, let's see here. Reliance stock. Yo, what up, King? What's the ticker symbol for that one? And David said TMUS stock. So yeah, T-Mobile reports earnings on, July 23rd. Can't wait for this. And I do own this one, so I might be a little biased. I'm actually down on them. I just like being fully transparent. Show you my winners and my losers right here. So I am down on T-Mobile, but I really like this one. They just partnered with SpaceX. And Amazon's kind of competing with SpaceX right now, but I love this company. I just made a TikTok about them and a YouTube short if you want to check it out. The margin expansion over here on T-Mobile. Look at their net margin right here. It's kind of just simple to understand. They now have a double-digit margin. If we zoom out, they used to be struggling, single-digit margins. So that's how they're making $3 billion of net income a quarter. So look at that. They literally make $3 billion of net income a quarter. What is T-Mobile doing with all that net income? Well, this is why I love the stock so much. This is the share buybacks that they're doing kind of at the bottom here. They spent $2.5 billion the most recent quarter, literally buying back their own stock, which gives you more ownership in the company, literally forces the stock to go up. Last quarter, they spent $5 billion buying back their own stock. So anyway, T-Mobile is one I might be a little biased on, but I do own that one, and I can't wait for earnings for T-Mobile. They also have a nice dividend, like a 1.5% yield. So let's see here. IREN. Yo, what up, Gabe? Yeah, dude, this one's on my watch list, and I love the growth here. So check this out. Look, the stock is at like a new 52-week high today, and I think they deserve it because they're on my watch list because something impressed me here. If I go to the revenue, Look at this revenue growth right here. Like if I'm going to buy a stock and kind of trust it, just hold on for the long run, I want to make sure that they have good growing fundamentals. And look at this, the revenue's up 166% year over year, and they made net income on that. And it wasn't like some one-time adjustment net income, it was real net income. They made 24 million. So they had a 16% margin. Geez. So yeah, that one's on my watch list to potentially buy the dip on if they go lower. What app? Oh, hey, P, yeah, this is a brokerage right here. If you want to get it, it's in the link tree in my bio, the very first link there if you want to get the app I'm on. But let's keep going here. Yeah, if you guys got any stocks you want me to look at, let me know here. Everyone drop a like on the stream. Hey, thanks, Spread. I appreciate that, brother. Hey, yeah, drop a like. I'd really appreciate that. And if you want to hit the follow button, we go live every day. Sometimes twice a day, we just look at stocks. And I don't sell nothing. I don't got a course or a book. All right, so let's see. What's a good long-term stock? Yo, I really like Google, man. We'll look at CPART and Trade Desk. Hey, yeah, we can look at Trade Desk, the advertising one. So I think Google's in a nice spot right now. They're like the cheapest Mag 7 company, out of all big tech. So look at this. The PE ratio on Google is literally at 20. So they trade at 20 times net income. That's a very fair valuation for Google, a Mag 7 company. But the real winner here is the margin growth. So look, the revenue on Google's up 12% year over year. Nice 12% revenue growth, but the net income from the previous year grew 45%. So that really means they're growing their net margin to a 38%. That's crazy. And they own so many businesses. Google owns Android. They own YouTube. They're in Google Search. They have the Google Cloud business. Look right here. Just the Google Cloud business. Just the Google Cloud business. Look at this growth. They own Waymo. They're going to be the quantum. They're huge in quantum. They're going to be the quantum leader, in my opinion. What's your YouTube channel? Yeah, hey, my YouTube channel is called Nathan Robert. I really appreciate if you subscribe. My YouTube channel is also in the link tree in my bio. So, let's see. So the Trade Desk. Oh, yo, I see SoFi. Yo, SoFi was just at a 52-week high. One of my best performing stocks. We'll go check out SoFi too. I know they're popular. So here's Trade Desk right here. The reason they've kind of gapped down, they've lost a lot of partnership. Their market share is slowly being taken away from Amazon and some other people. But like Netflix, for example. Netflix used to use Trade Desk to find all their ads, and then Netflix dropped them as a partner on that quarter. Netflix is like, oh, we'll just find our own ads. But for right now, that's future uncertainty. That's why the PE kind of fell a little bit because the future's a bit uncertain. But for right now, the company's in a fantastic spot, super profitable, growing like a maniac. Look, the revenue's up 25% year over year on the Trade Desk. The net income's up 60%. So they're growing their margins. I love looking at the real financials here. And they're printing money. Look at that. Last quarter, they made near 200 million. What about FCF, free cash flow? Yeah, look at that. They're making 200 million of free cash flow. So a quarter. So I do like Trade Desk financials right now. I should have looked at the margin. Yeah, they're really growing their margin. Oh, what up, Mike? We said ADP. So what up, dude? So, and Mark said, I lost my nuts on Google 2 weeks ago. Oh, damn, that sucks, man. Yeah, dude, Google's been really volatile, but that's when you just want to kind of hold shares on for the long run. Yeah, that's tough. So here's ADP right here. This is automatic data processing. So I think they have a nice yield. Yeah, check that out. You get a 2% dividend, paying $5.50 a year in dividends. So employer services, how's that doing? Look at that. At least it's growing. It's up, high single digits. What about their other big segment, professional employer? Hey, that's up 7% year over year. So also growing. I like that. So let's see, revenue up 5, net income up 5. So yeah, look at that. They're just extremely profitable. Wow, they're making nearly $1 billion of after-tax net income a quarter. What about free cash flow? Yeah, free cash flow is even better. So, yeah, it is a little better. So anyway, they're just really profitable and they're still growing. So yeah, let's go to SoFi right here. I do own this one. I don't own many shares, but I believe this one deserves to be at a new 52-week high today. Oh yeah, and SoFi is an innovative company. They're giving investors if you have the SoFi platform, which I don't. I'm not a customer of them, but you can invest in SpaceX and OpenAI on their platform or something, some innovative token thing. I don't know. Sounds risky, but anyway, this is why I like SoFi. The financial services growth, the revenue growth here is insane. Look at the revenue; it's up 101% from the previous year. That's why I think SoFi deserves to be at a new 52-week high right now. And also, the half their things are loans, lending, student loans are huge right now. It's up 25% year over year. That's crazy growth. And if we go to the, net income right here, they're actually profitable, making net income every quarter. When if we zoom out, they kind of used to lose net income every quarter. So it was a tough buy. And I just like being fully transparent. I will show you my SoFi position. Where are they? Yeah, check. We don't have much, but we got 24 shares of SoFi. I bought this stock 3 years ago, man. I think it was on this dip right here. Yeah, that's where I bought SoFi, January 2023. So I know too much about them. They got their banking charter through a loophole that's now patched because of them. SoFi has just been so innovative. So I'm glad to be a shareholder of them. But some of these risky companies, like a SoFi, a Robinhood, maybe a Super Microcomputer. I saw someone in the chat. I might go. We could look at Super Micro as well. I do own that one. They like install the servers for you, another good one, but you don't want to have a huge chunk of your portfolio in these because they're so risky. Hey, no way, yo, he said, do some research on SCWO. Let's check it one out. And he said, gave you a follow. Hey, I really appreciate that, him. Thanks for the follow, man. So is this what you're talking about? 374 water. So this isn't the kind of stock I like to cover on this channel. I don't really like to talk about these, but I'll tell you why. So if you look in the top right, this is a $27 million company. So first off, they're at an all-time low as well when the market's at an all-time high. So extremely low market cap. It's just hard to really trust this company. And look at that. They're losing a 4 million or 3 million a quarter, and the whole company's worth 27 million. So yeah, I be super careful with that one. I wish I could. If you got another stock I'm gonna look at, let me know. But that one looks really, really risky. Hey, so let's see here. Yeah, sorry if I don't get to all the stocks here. Barilla, what's up, dude? MRVL, he said, can we look at? Yeah, this is Marvel Technology. So they are finally profitable. This is great news for them because they pay a dividend. So if we go to the dividend right here, yeah, you get a really small yield, 0.33% yield. But check this out. If we go to the net income right here, in the two most recent quarters, they're finally making money. Because if we zoom out, look, they used to lose hundreds of millions a quarter. It was a tough buy, but now they're finally profitable. So that's great news for them. They also have a really good balance sheet, and cash flow is really good as well. FMR is the largest shareholder. Anyway, yeah, I do like Marvel. I believe, I forget exactly, but they're in the semiconductor chip industry. Let's see the categories here. Anyway, hopefully that was helpful. I just love that they're profitable, and I know they'll keep up that profitability. So let's see. Grab Holdings. Yo, this is a really cool company. Yo, Michael, he said, hi, how can I participate? Yo, Danielle, how's it going? Yo, just comment a stock and I'll check it out for you. How's it going? Check out ticker symbol Lulu. Hey, yeah, Lululemon. What's up? We'll check that one out too. So here's Grab Holdings. This is a very interesting company. So here's Grab Holdings, and they do exactly what Uber does. Check this out. They literally do exactly what Uber does, but in all these other countries. Notice you don't see the US or Canada on any of these countries. And that's why it was so genius for Uber to buy this company. If we look at the largest shareholder of this stock right here, Grab, it's actually Uber Technologies. They own 13% of the business. So, 13% of this company's free cash flows are going to Uber. It was genius. It was absolutely genius for Uber to buy some of this company. It gives them instant international exposure. And it's good for Grab stock as well. They have a huge, their largest investor is, Uber. What a great partner. Synergistic acquisition there. So let's go look at Lululemon right here. Yeah. Let's see. Mez Raquel. Sorry if I'm saying her name wrong. How's it going, man? So here's Lululemon. Yeah. So this one, all the apparel stocks have been struggling. You can look at Louis Vuitton stock. You can look at Nike. They're all struggling right now. And Lululemon is actually the best positioned, in my opinion. The PE ratio is the lowest it's been since 2008. So they're trading at 16 times earnings, but I think it's because the growth is starting to slow and the margins are collapsing a little bit. So check this out. I like this data. We got the number of stores. They have 770 stores. When last year they had, how many they had last year? 711 stores. So they grew by a couple of stores, but here's the bad news. So if we look at the revenue was up 7% year over year. Good news. The lifeblood of the company, revenue's up 7, but the net income actually fell by 2%. So their margins did get squeezed a little bit, and I think that's why investors aren't too happy, but it's also kind of just the whole industry right now. That being said, they're in a much better position than Nike is. So I do like them. What thesis do you trade? And what timeline is your portfolio? Yeah, hey, if you go to my YouTube video, I talk about this all the time. I have different goals for each portfolio. Like this one right here, this is my buy and hold portfolio. This one right here is my risk on portfolio. I try to buy some risky companies I think are going to do good. But I always buy risky companies that have good fundamentals, like Supermicro, Reddit, Toast, PSIX, my newest purchase, T-Mobile. I think these have really good fundamentals. So yeah, hey, sorry if I don't get to all the stocks. I do want to try and get to all of them. So Launder said, IONQ, should I go long in calls? So IONQ, I think this is a quantum stock. So yeah, hey, they're down 9% on the day. Let's go look at the financials here because I this has just been a whenever the quantum stocks move, this one moves, kind of like qubits. They really move a lot. Let's see. So they are losing net income every quarter, not great. So it's tough. What's the market cap? If it's over like 3 billion, it's a no. It's 12 billion. Okay. So yeah, in my opinion, financially speaking, this is extremely overvalued. There's so much momentum in this name right now. They have been fortifying their balance sheet. Actually, hold on, how much cash they have? $588 million of cash. They just issued a bunch of shares. That this was genius for them to do, but they diluted the shareholder by a bunch to fortify their balance sheet, raise a bunch of cash. Now that cash is earning interest. So if you like this thing's still really expensive. I'd be careful on them, but it's just a momentum mover. But that's why is Nike in such a bad position? It's we just looked at Nike. The margins over there has collapsed. AMD is that one risky? Someone said. Yo, what up, Oni? He said AMD. So yeah, dude, I actually own some AMD. I am up on the position. I think I'm up pretty good. Yeah, 17%. Let's go. This is probably just because NVIDIA's been doing so good lately. You know, they've definitely underperformed NVIDIA. As we know, NVIDIA is at an all-time high right now, and AMD is still like 40% off all-time highs. But still, I love AMD. I'm a shareholder, and I might be biased, though. So again, none of this is financial advice. I'm not an expert. Let's check out the financials, though. So AMD, huge GPU market share, obviously, 17% PC GPU market share. But look, this is really a data center play. Check this out. Half the revenue comes from data centers, and look, it's up 58% from the previous year. So AMD is just really growing their top line and their bottom line. Like FCF right here, it stands for free cash flow. It was up 91% from the previous year. Look at that free cash flow. Net income's up 400% year over year. They're making so much net income now, and they have this monster balance sheet. They have no net debt at all. So like 10 billion of net cash. Their cash is earning interest. I mean, AMD, in my opinion, is in a good spot. So nice portfolio. Done more into that Roth. Yeah, hey, my Roth IRA here, I'll show you that really quickly because I haven't showed it in a while. I do have a Roth IRA. It's very small though. So yeah, here's my main taxable account. This is my dividend growth portfolio. Every stock in here pays a dividend. Every stock is also in the S&P 500. But I also have a small Roth IRA. You know, it's only $1,400. I started it exactly a year ago, but I am trying to deposit more in here. I got Main Street Capital. Has anyone heard of Main Street Capital? Monthly paying dividend stock with a 6% yield, and the sucker's at all-time highs. I don't believe it. Let's see. Let's see. Check out these ones. Fubo TV, Celestica. Yeah, what's the ticker symbol for Celestica? We'll check that one out. Uh, Let's see. Adobe? Oh yeah, dude, Adobe. What up? Dig for Green. What's up, brother? So yeah, I use Adobe products near every day. I'm on Photoshop, After Effects, like pretty much daily. And their thesis is really being hurt right now. Like I know someone they needed a logo. They legit made this incredible logo on ChatGPT. Like ChatGPT made the logo and it looked incredible. I'm like, that would take me an hour in Photoshop. So AI is probably going to hurt them in the future, but for right now, Adobe's in a great spot. They're still growing really good. Like 73% of the revenue comes from their digital media. I mean, if we look at the annual growth here, I mean, the business is still growing. We look at the digital experience, it's still growing like crazy as well. And if we just go to the net income right here, they're literally making, look at that, 1.6, 1.8 billion of net income every quarter. So very profitable. The free cash flow is even better. They're making over 2 billion of free cash flow a quarter. So Adobe's printing money right now. And they're also buying back their own stock like crazy. So that's what it's not too bad. You know, Adobe's going to be buying back their own stock like crazy. Oh, let's see. CLS, Celestica. Okay, let's check it out right here. And hey, I would also appreciate if y'all would hit the like button on the stream for me. I don't sell anything, yo. I don't have a course, book, Discord. I'm just trying to give my opinion. Best way to support me, though, is subscribe to my YouTube channel called Nathan Robert. I'm also streaming on there. You can replay anything you've missed. But here's Celestica right here. Stock's at an all-time high. Let's go look in the financials and see if we can figure out why. So connectivity and cloud solutions. Wow, look at their revenue like jumped up right there. Wow, so the revenue is like really growing. You know, that's a business you kind of want to be in right now. Connectivity and cloud solutions, advanced technology solutions. What about the net income? So yeah, revenue's up 19%. The net income did fall a little bit, but looks like that was a little adjustment. But still, they're making a lot of net income every quarter, 100 mil a quarter. Free cash flow's up 20. So hey, I can see why that one's doing so good. So here's a company that I recommend to stay away from. So here's something you this is a really risky company in my opinion. So here's Plug Power. I want to look at them on the weekly chart if it would load here. Hold the phone. You might got to go to the okay. So yeah, this stock right now is pretty much at an all-time low, and in my opinion, it's just going to continue to hit new and new all-time lows. And so I feel bad if you own this one, but here's why. If actually, let me show you the market cap. So just we'll think about it very simply. Here's how much the whole company is worth, and you can buy in at this valuation. The whole company is worth 1.86 billion. That's the market cap in the top right. So the whole company is worth 1.86 billion. Let's say you buy the whole company at that valuation. You're buying a business that literally lost 200 million of net income just in the past 3 months. In the 3 months before that, they lost 1.3 billion, and then 200 million the quarter before. So that recipe explains why this stock just keeps on hitting new and new all-time lows. They're also diluting the shareholder while the stock's at all-time lows. So that's a classic. Trade that one, but don't buy anything. Yeah, that one dude said it's tough to buy anything right now. I agree. The S&P is like near 1% off all-time highs, but I will show you. Someone said, what's your most recent purchase? I did buy, here it is. I just bought and I'm down on it, but I think even though the market's at all-time highs, this one isn't. I bought some Progressive, ticker symbol PGR Progressive. This is an insurance company. I'd put this one on your watch list because you won't believe the growth here. If we just go to the revenue right here, or actually for insurance companies, I'll show you it exactly. I'll go to the actual balance sheet. Look, here's their total premiums earned. It's on the left now, the very left. The total premiums earned, I mean, this is ridiculous for an insurance company. It's literally 19 billion just in the most recent quarter, up 21%. And they have their net investment income. These insurance companies get to invest the money while it's on hold, basically, and the net investment income is 800 mil. I mean, Progressive, that's why this stock has been such a multi-bagger. I mean, and I still think the valuation is fair even right now. They're trading at 15 PE. They're doing special dividends. So I really like Progressive Corp. That's why I bought them. And actually, if you want to see more about why I like Progressive, 10% free cash flow yield, 6% earnings yield, all this stuff, go to my most recent YouTube video. I go over why I bought Progressive, and I go over why I bought some other companies as well. So Connor, what up, brother? Connor McGregor, no way. So he said Duolingo stock. So yeah, this is an incredible company, and the valuation is starting to make sense because it's well off all-time highs. So it's finally like a reasonable time to maybe buy into this name. And here's what's so incredible about Duolingo. If you heard of Duolingo, it's like that boring language learning app, and you got to pay for a subscription or you got to watch a bunch of ads. And look at this subscription revenue. You can't believe, I don't believe it. And this is why they're so incredible. It literally hits a new record every quarter. It's up 45% from the previous year. It grows, look at the year-over-year green numbers there on the bottom middle. I mean, it grows 45% every year, every quarter, no matter what. So the growth of Duolingo subscription is just incredible. Also, they're a small advertising business. Let's see how their advertisements doing. Look at that. The advertising revenue is up 38% year over year. So that's really good growth on Duolingo. I'm actually really impressed. And look at the FCF, which is free cash flow. I mean, 100 mil of free cash flow, up 30%. They're making net income as well. They have no debt, lots of cash. I know their cash is earning interest. So yeah, they're on my zero debt watch list. I have a watch list right here of all companies with zero debt, like Yelp, Zoom, Duolingo, Pinterest, Reddit. They're all debt-free companies. I-80 Gold Company. What's the ticker symbol? What up, Tutopi? What's the ticker symbol for that one? And what up, Lauder? Yeah, hey, nice to meet you. All right, let's see here. RIP Dave. Yeah, it's really just all the fintechs right now. Like, actually, hey, Marcuccio, look at ticker symbol SEZL. If you want to see my full analysis, go to the beginning of the stream. I did like a whole segment on this one, but SEZL is like a competitor to Dave. They kind of do the exact same thing, and they're also down 9%. Here's a great company in my opinion. Not financial advice. Put this one on your watch list because this is a phenomenal company that has impressed me on every metric. And if you could get in this company at a good price, I think it's worth it. First off, this checks every box for me. If I'm going to buy a stock and hold it forever, I want to have good fundamentals, and this one, in my opinion, does. The revenue, first off, is more than doubled. It's up 123% year over year. So they made 104 mil of revenue, but in net income, they made 36 million of net income. So they have an insane 35% net margins, and the margins keep on growing. So this is another fintech right here. Their liabilities went down, their assets went up. I mean, Sezzle is crushing it. They're kind of a competitor to Dave. I do own Dave as well. Yeah, I did sell. I took some profits on this one. I sold this one at 272. And what's it now? 202. Okay. Bro said I'm a machine. Yo, this yeah, I am not AI, but hey, what up? Yeah, I appreciate y'all being here. So here's Visa right here. Yeah, dude, this is the payment processor credit card. They have a duopoly with MasterCard. Yo, the small little micro transaction fees that are slowly bankrupting us are making Visa a fortune. And well, let's go to their net income. How much are they making? I mean, isn't this crazy? Visa's making pretty much 5 billion of after-tax net income a quarter. I mean, that's a lot of net income. And this is a nice dividend growth company. A lot of people like them because they grow their dividend every year more than inflation. So you get paid more and more every year, and then it just compounds. So Visa's just a winner. And they fell a while back, like a week or two ago, because of the new Circle like stablecoin card. But Visa's like, nah, we're so innovative. We've been looking at this technology for a long time. Yo, Chris is me. No way, dude. Chris is me. Thanks so much for the rose there, brother. I appreciate you. If you got a stock you want me to look at, let me know. I don't know how long ago he sent that. Maybe he sent a stock. I feel terrible. Yo, Chris is me. If you got a stock you want me to look at, let me know. Yo, Penn said I hope I can find this stock. Hey, thanks, him. I appreciate you, man. AUD. Yo, I'm streaming on YouTube and TikTok right now. So this is like the conversion of Australian dollars to USD. Yo, this isn't really a stock. I wish I could give you more thoughts on this, but that's just like a Forex. That's just like a currency fluctuation. So opinion on gold. So yeah, here's how you invest in gold through an ETF. It just ticker symbol IAU. IAU is the literal digital version of gold. It's better than physical gold in my opinion because when you go to a pawn shop to sell it, you gotta pay a little fee. And anyway, you can instantly sell it whenever you want. I just like gold. It's tough to buy gold though. I mean, it's pretty much at an all-time high right now. But it's doing great because of inflation fears, war fears, tariff fears, de-dollarization. I mean, people want gold, and that's why Bitcoin's doing so good right now as well. Yo, Chris is me. What up, dude? So someone said AMSC. So this one's on my watch list, actually. Yeah, they are on my watch list. This is American Superconductor. So they're a small company, very small, $1.7 billion company, but this one's on my watch list because I think they're going to continue to be a winner. I think that market cap does have some room to grow because they're just now getting profitable. Look at that. The 3 most recent quarters, they actually made a lot of net income and it's growing as well. So if we just look at the revenue though, revenue growth is very strong, up 58% year over year. And they made 1.2 mil of net income. That was like a decent margin for just now getting profitable. Yeah. So really good balance sheet as well. So American Semiconductor, or AMSC, is one I have on my watch list because I do think they're probably going to keep on going higher. Not financial advice here. So let's see. SoFi, TMO. Oh, what up, Bogdan? Yeah, we'll look at TMO. We already looked at SoFi a few times. Remind me to look at SoFi. Yo, William West. We'll look at AGI too. Remind me to look at AGI. I want to get to all the stocks here. Sorry if I don't get to them. So here's Thermo Fisher Scientific. I think this is just like a life science research company. They have a decent yield, 0.4% yield. The yield's decent for the very low payout ratio. The payout ratio is less than 10%. So that means they're going to have a lot more room to raise their dividend. So yeah, look at that. Laboratory products. Hello here. There we go. Laboratory products, life science solutions, analytical instruments, specialty diagnostics. How's that doing? That's up 4% year over year. Anyway, let's see. Net income. Yeah, look at that. They're printed money. 1.8 billion of net income every quarter. So I do like the net income that TMO is making. They're really growing their net margins. Hold on. Yeah, look at this net margin. It grew 13% year over year. So I do like that. And they're kind of on a dip right now. So let's see. Yeah, we'll look at SoFi real quick. I do own this one. This is a fintech. They're so innovative and they deserve to be at a 52-week high right now, in my opinion. That being said, I don't know if I'd buy this one right now because the valuation is really high. But I do really love SoFi. And I do own them. So this is a fintech right here. And this is the part I love the most about them is their financial services revenue, which is 40% of the revenue. It's just grown immensely. It's up 101% from the previous year. So look at that. Financial services revenue is more than doubled. So great company that I'd want to hold on to. And if we go to the net income, I mean, they're making net income every quarter. They're a very profitable company when they used to lose net income every quarter. So people are really taking SoFi serious. So let's see. DocuSign, just said DocuSign. This isn't one I'd really recommend anyone buy. They're just so slow growing. I do own this one though. I bought them literally a long time ago on this October dip and just haven't. This is my buy and hold portfolio. I just don't really sell stuff in here. But DocuSign is just a slow grower and one I really wouldn't want to buy. Because look, the revenue is up 7.6% year over year. Not great. I mean, 7% growth. And they are finally net income positive. That's the good news. They're making like 40, 50 million of net income a quarter. They have no debt actually, which is really good. I've made a lot of YouTube videos about DocuSign. If you want to check it out, hey, best way to support me, go subscribe to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. I'm streaming on there as well, so if you missed anything, you can rewatch it. Joe Sunscreen said QS stock. So this is QuantumScape, and look at that. This is like a rare earth mineral company, I think. And look at that. They just rallied up. I think it was on the MP Materials deal. I don't remember. But I think they don't have any revenue. Yo, what up, John? How's it going, dude? So, yeah, here's the bad news. If you go to revenue right here, you see how it says 0? They literally don't sell anything. They don't sell a product or a service. So there's no data here because they just don't sell anything. And they lose 100 million of net income a quarter. Luckily, they have a great balance sheet, no debt, billion of cash. But there must have been some good news recently. So I need to know what that news is. And maybe they're finally able to make some money. Hopefully, that's the good news. Someone said, how about SoundHound? Oh yeah, hey, we could look at SoundHound and VG stock. Yeah, well, I want to check out all these stocks. And ODFL, yeah, we can look at that one. And Nebius. So here's SoundHound AI. This isn't a great company, but there is one thing I do love about this stock, and it's their subscription revenue. I love subscription model companies because it's all like reoccurring revenue. And just look at the growth here. Like literally a year ago, the revenue was 650,000, nothing. Now it's 25 million in the most recent quarter, literally up 585%. With this insane growth rate, what's it going to be this time next year? Also, if we go to their product royalties, not great, down 43%. This was a high margin revenue stream for them, so I don't know why that was down so much, but they are still struggling with profitability. They're losing a lot of money, but they'll hopefully kind of grow out of that. So you're really hoping that subscription revenue just keeps on growing. So yeah, hey, what up, Willpower? How's it going, man? So ODFL, this is Old Dominion Freight Line, right? So yeah, this is like a less than truckload like business. So like they just ship stuff for you, or you can use it's just an efficient way to ship stuff. And unfortunately, yeah, look at that. The stock hasn't done too good. It's kind of been flat for a while. Let me go to the net income. Oh, so that's probably why. So yeah, if you're kind of wondering why is the stock kind of flat on the 1 year, 2 year, probably because the business is slowed down. Look at that. The revenue is actually down 5.8% year over year. So revenue's down 5.8 and the net income is down 12. Still, they're extremely profitable, making 200-300 mil a quarter, but it's slowing and it's down 12% year over year. So not great. I know I like their dividend points. Look at how they grow their dividend every year. That's crazy. So ODFL, I like them. Highwood JMIA. What up, Brokey said JMIA. So let's see. Oh yeah, Broke as a good hold as a speculative stock. So yeah, let's go check them out. Yeah, this is probably on the speculative side, like you said. Yeah, their market cap is 530 million. So I don't usually like to hold these kind of companies. So $530 million market cap. Let's see. Are they? Oh, so look at that. The revenue's down 25% from the previous year, and they're losing 15 mil a quarter. So remember this company's market cap. This company, JMIA, had a $500 million market cap. Here's honestly what I think you should buy. Again, not financial advice here. Oh, the ticker symbol, I forgot it. Or it's DCTH. You should buy, in my opinion. This is a small, if you're looking for a small cap speculative long and hold, this is a great one. Put this one on your watch list, in my opinion. If you look in the top right, the market cap is 400 million. So already the market cap is $100 million less than that other company. And let's go check out the growth of this company. So look at the revenue first off. The other company was down 25%. It just exploded to a new record. It's up to 19 million, and they made net income on that, 1 million of net income. So this company's basically profitable. They also have no debt. They have literally no debt at all. Yeah, look at that balance sheet the most recent quarter. They fortified their balance sheet. They have no debt and 60 million of cash. So a lot of this company's market cap, like 20% of the whole market cap is their cash on hand. And all their cash is in short-term investments. So they're making these 1 to 3 week treasuries. They're making a bunch of interest. Actually, on the YouTube stream, go to the very beginning of the stream. The first thing I do when I start the stream is I do a full analysis on DCTH stock. I'm streaming on YouTube and TikTok, but if you're on the YouTube stream and you want to see that, go to the very beginning of the stream. I do a full, like I show you the balance sheet. I show you that they have no debt, show you the cash, the interest and all that. So anyway, let's keep going here. Sorry. Oh yeah, William, let's see. He said AGI stock. So Alamos Gold. So I assume this one's doing pretty good just because gold is at all-time highs right now. So yeah, look at that. Great performer. So this could be a way to get exposure to gold and get a dividend because they have a small yield, 0.4% dividend, not too shabby. So these must be the mines that they own. Shorting the nation of Germany on EWG puts. Hey, what up, him? Good luck with that. So I think these are all the mines that they own. Island Gold, Young Davidson. Hey, that's up 22% year over year. So yeah, Mulattoes. So that's cool. I like how diversified that it is. It's not just all one place. So look at that. So no America. So 68% Canada, 36% Mexico. What about net income? So yeah, look at that. They're making a lot of net income. Probably just varies. Oh yeah, the operating profit. Okay, so yeah, they had a little one-time adjustment to the net income in the most recent quarter. They actually made quite a bit more than that. But anyway, yeah, that could be a way to get exposures to gold and get a yield. Okay, so CAT stock, yeah, so this is Caterpillar right here, and this is your like industrial, huge, heavy machinery play, and look, it's at an all-time high right now. So yeah, congrats if you own this one. Incredible stock price appreciation, and even if you buy this one right now, you get a nice yield, a 1.4% dividend yield, and the payout ratio is only at 25%, so they actually have room to raise their dividend. And look at the diverse revenue streams over here. Energy and transportation, they're in the construction industry, obviously, also the resource industry. And if we go to the net income down here, yeah, even though it's down 30% year over year, it was a tough comp because it was up 46%, but they're making $2-3 billion in net income a quarter. So I do like this one. I like the dividend, and the stock is at an all-time high. So it's tough buying them at all-time highs. But yo, Lucas had thoughts on Citibank. What's the ticker symbol for that one? I'll type it in for you. Citibank. I don't know if I can find that one, brother. Let me know the ticker symbol for Citibank, and I'll check it out for you. So let's see here. IAUX. What is that right there? So I-80 gold. So dang, gold's at all-time highs, but this one isn't. So that's not good. Maybe this one isn't too gold related. I don't know. So Granite Creek. So this is where the revenue comes from. Sorry, the thing isn't loading. There we go. So these must be the mines that they own or whatever. This is probably why. Look at that. They lost $40 million in the most recent quarter. Those are yeah, and they barely have any revenue. Those are tough net income losses. 40 mil a quarter, and the whole company is worth 500 mil. So they actually have a bankruptcy risk. That one, I'd be careful with that one. Any love for commodities, oil and gas, Exxon? Oh yeah, so Exxon, this is one you just want to. Every portfolio needs a little bit of oil and gas because, there's war fears, inflation, and oil will spike, and you can make a lot of money. And this is a good industry. It's good to have a diversified portfolio, maybe a couple percent of your portfolio in oil. And you also, with oil, you get high yields. Chevron has like a 5% yield, but for ExxonMobil, you get a 3.36% dividend yield. Not too bad. You won't believe how much net income that they make. They literally make an after-tax money, $8-9 billion of net income a quarter. So incredible net income here on Exxon, and you still get that dividend. I think let me go to Buffett's portfolio real quick. Buffett, I think he owns Chevron. Yes. Oh, yeah. He owns Chevron and Oxy. So, yeah, here's Warren Buffett's portfolio. Obviously, you got Coca-Cola, but 6.34% of the portfolio is in Chevron, another 4.2% in Oxy Petroleum. So, pretty cool. Can you teach me about, Har, what's up? I don't have a course, a book or anything, but I do teach a lot in my YouTube videos. So if you want to help me out, go subscribe to my YouTube channel. It's called Nathan Robert. And if you want to get this app I'm on right here, go to the link tree in my bio, the very first link there, my favorite app for analysis, So, and it's free. So this is the main app I use too. So here's DXCM stock. So let's go check this one out. So a $32 billion company. So wow, that's a really big market cap on this company. What's the yield here? So no dividend on this company. What do they sell? Let me go to profile. Medical devices is their industry. So the revenue's up 12%, but the net income is down 28%. Was that real? It wasn't real. Okay, so that, kinda. Yeah, I don't know why the stock is struggling so much. There was some news that happened right here that I don't know, but I don't know. Got to do more research on them. Hopefully that was helpful. What is the FCF? Yeah, FCF is free cash flow. Yeah, that's what FCF stands for. Micron Technology and ASML. Yeah, remind me to look at ASML. I want to look at that one too. So here's Micron Technology right here. So this one is like an NVIDIA competitor. They're also in the like computer networking business. So check this out right here. Micron Technology also pays a dividend, which is cool. Very small yield right now, but they'll kind of grow that over time. But look at this. Their computer networking business is 55% of the revenue. Look at the growth here. I mean, this is why Micron's doing so good. It doubled to 5 billion in revenue. Well, last year was 2.5, now it's 5 billion. So really good growth on Micron Technology just on that one business. I mean, they got these other segments of revenue like storage business unit. So anyway, if we go to the net income, this is, the real winner, the bottom line, the after-tax profits. I mean, look at that. They're making 1 to 2 billion in net income a quarter. When look at that, they used to actually lose 1 to 2 billion in net income a quarter. So they've really grown the business and turned things around, which is great. How can I start at 17 if my guardian will make me an account? Yeah, you just got to wait till you're 18, Advo. That's what I did, man. I remember 17, I had money saved up. I started investing the day I turned 18. So I would just hold on to it. And it doesn't, I would just be patient. The market is at all-time highs. So let's see here. I made 1,000 off Wolfspeed. No way, Billy. I'm impressed. Perisco said MARA stack, not just a Bitcoin miner, but a energy infrastructure play. So yeah, let me find Marathon. I think they're in like the crypto stocks. Okay, let's see. So yeah, MicroStrategy Circle. Where is Marathon? Are they not on the watch list? MARA. No, they're not. So anyway, we'll just type it in then. So yeah, the thing is, this company just mines Bitcoin. So as we know, Bitcoin's at all-time highs right now. Bitcoin's at 115,000. But look at this stock right here. This stock is nowhere near all-time highs. So that's what's kind of unfortunate about this. It hasn't really kept up with the price of Bitcoin. It moves with Bitcoin for sure, but I mean, the stock has been nowhere. And if we go to their balance sheet, it's kind of leveraged up. The net income's a bit choppy. They lost 500 million. So I just, nothing really blows me away here to really want to buy Marathon. Was the revenue growth good? Revenue, hey, it's up 30%, not bad. What app is this? Yeah, hey, Sebastian, this is actually a brokerage. If you want to get this app, I'm on the software. It's in the link tree in my bio, the very first link there. It's my favorite app for analysis. I also like to keep my cash in here. Like if you look at the middle of my screen, I keep my thing earning. But anyway, let's keep going here. What about TCBP and Tesla's? Or I can't find that one. TCBP. I can't find that one. Is it TCBBY? That one looks weird. So Tesla, yeah. So anyway, I'll give you my honest thoughts on it's not great. It's right. If I judge Tesla the way I would any other company, this is one of the most overvalued stocks in the market. So hold on, let me fix this real quick. Hold on, give me one moment. Sorry, the Apple TV there. We're back. Okay, so Tesla. The thing is, I'll just show you the numbers for yourself so you can draw your own conclusion. So we can see their total vehicles delivered year over year. The total vehicles delivered are actually down 14% year over year. And that's their automotive business. So if we go to the automotive segment, this revenue is down 16% year over year. So the business kind of lost its growth. And when you have a high valuation, Tesla trades at 179 PE. It's tough to pay that high premium for a business that's not growing. Like actually the margins collapsed. Look at this. So the revenue fell 9.2% year over year. So revenue's down 9, but the net income is down 70% year over year. So what that means in English is the margins have collapsed. It's a 2% margin. Now, I get both theses. The high valuation comes from the future of robotaxi and robots, but in my opinion, it's tough to pay that valuation right now. That's all I'm saying. So let's see. CTAS. Then we'll look at Kroger. Yeah, hey, they have a nice dividend. So here's Cintas stock right here. They report earnings, July 17th, and today's like the 12th or something. No. Yeah, the 12th. Yeah. Okay. So, what is this? Uniform Rental Facility and Services. So, hey, the business is really growing. Look at that, especially in 2023. Kind of bumped up there. First aid and other safety services, that's up 15% year over year. That's really good growth, double digit growth. And look at this net income. Wow. Net income is really growing. It's up 17% year over year, making near 500 million a quarter. Do you got a dividend? Yeah, 0.7% dividend. I actually really like CTAS. I see why you like them. So here's Kroger. This is a grocery store, obviously, and they have been doing pretty good recently. They actually bought back 8% of all the shares in the past year. So if you own this company 1 year ago, you own 8% more of the ownership in the company because there's 8% less total common shares that exist. So, and that makes the EPS go up by default, makes the stock price go up. Anyway, they have a nice yield as well. You buy Kroger, you get a near 2% dividend. They raise their dividend every year. They have a low 33% payout ratio, so they have so much room to raise the dividend. And yeah, if we just go to the net income down here, it is down 9% year over year, but they're just making, hundreds of millions a quarter, low valuation, nice dividend growth, but it's just a boring industry, low margin business. Yeah, 2% margins on these grocery stores. So I do really like Kroger. I actually kind of own one of their competitors. So remember, Kroger had a 2% net margin. I actually own kind of like a healthier grocery store. This is Sprouts Farmers Market. Has anyone heard of Sprouts Farmers Market before? So their food's a little bit more expensive, but that's why they have these crazy margins. Check this out. If we go to Sprouts Farmers Market net margin, this is a record quarter. This is why they're doing so good. They have an 8% net margin. And that's what you really want to focus for these grocery stores, the margins. And the margin is growing 33% to an 8% net margin. So that kind of explains, look at this. Sprouts has moved like NVIDIA. I mean, I can't believe it. So that's why, because they've really grown their margins. Sprouts is amazing. Yeah. They're really, I love like the layouts of the stores. They're really nice. Do Venture Global. Hey, what's the ticker symbol for that stock? What up, Flix? Yeah, let me know the ticker symbol. Oh yeah, ASML. Let's check this one out. So this is the chip making manufacturer. They make the lithography machines. They have three main customers: NVIDIA, Samsung, and Intel, I believe. Those are like they only have like three customers, or it's like 90% of the revenue. So anyway, this is a European company. And they just had they had a record quarter actually. So if you look at the revenue, it grew 50% from the previous year. Really good growth, 50%. And the net income actually grew 100%. It grew 93% year over year. So if you go to the net margin, the margin is up 31% from the previous year. So anyway, ASML is just a nice growing company. They also have a dividend, 0.85% dividend, but I do think there's some customer concentration risk, and the valuation might be a little high, a 31 PE. But that's historically really cheap for ASML, so actually maybe not. So yeah, they're a European name. I do like ASML actually. VG stock. Okay, let's check this one out. Yo, Beats. We'll check out AMTM too. So here's Venture Global and LAES. Yo, I don't like that stock, but we'll check it out. I think if I remember, I don't have good things to say about that one. I don't think. Is that CLSQ or whatever? So here's Venture Global, $43 billion company. They just IPO'd just about a year ago. So let's see, what's the dividend? So a very small, they do pay a dividend, which is actually crazy. Wait, is that a dividend? Yeah, they did pay a dividend. Maybe it was a special dividend, but they did pay a dividend. So what is this? The Calcasieu project, probably fumbling that name, but something project, the Plaquemines project. Well, hey, look at the growth there. This time last year, the revenue was 23 mil. Now it's $1.9 billion. Anyway, let me just go to the revenue growth right here. Hold on. So yeah, look, the revenue doubled up like crazy. Look at that. Whoa, the revenue was just like 200 million, and now it's 2.8 billion the most recent quarter. Incredible. And they're making net income off that. If we average out the 4 quarters right here, they're very profitable. So this is actually a really interesting name. Dude, the cash from operations, bro. $1 billion? What was the free cash flow on that? FCF, where you at? Free cash flow. Oh, so the free cash flow was negative. So that's really interesting. So I bet if we go to the cash from investing activities, yeah, dude, whoa. They're investing 3.8. That's why their growth is so high. They're investing literally $3.5 billion a quarter into the company. So that's why the cash from operations is positive, but you have to factor in the cash from investing activities. It makes the free cash flow go negative because they're investing it. So, I still like them. All right, so let's see. AMTM stock. What is this one? Amentum. Oh, I like Lyft as well. Someone said ASML has a monopoly, has an order backlog of 10 years forward. Hey, that's crazy. So here's Amentum Holdings, a $5.8 billion company. They just IPO'd as well. So there's not too much data I don't think we have. Let's see. What's the revenue here? So revenue's up 70% year over year. Really good revenue growth. So revenue's up 70. They're just now getting net income positive. Yeah. So that's good news. Let's see. Cash from investing. I w- I wish I could give you more thoughts on this one. Global Engineering Solutions. The revenue's up 36% year over year. Digital Solutions, look at that, up 184%. So I like the growth on that company. They just IPO'd. Oh yeah, so Coinbase stock. So yeah, ticker symbol coin. This is that crypto trading platform. I had a Coinbase account before, and look at that. That's an all-time high. I don't believe it. All-time high on Coinbase. So if you've ever bought them, congrats. They also kind of move with crypto and Bitcoin. But here's a really cool statistic: monthly transacting users. That's a good stat we can look at. And they have 9.7 million monthly transaction users. When this time last year there was only 8 million. So it grew by 1.7 mil. That's pretty cool. And yeah, look at this net income. They usually make all their net income that one quarter, but if you average it out, they're making a couple hundred mil a quarter. So I think Coinbase got added into the S&P 500. I don't remember, but I see why that one's doing so good. App. Oh, hey, yeah, Rex. If you want to, Rex, what's up, dude? If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's a brokerage, actually. But, oh, hey, what up, Lucas? So, Citibank right here. Yeah, Rocket Lab. That's another company with a huge $1.5 billion backlog. So, here's Citigroup right here. Yeah, the stock hasn't done too good since 2020. But let's go see the dividend. So, yeah, look at that. You get a 2.5% dividend on that one. Not too bad. This is a bank. So, yeah, look at that. They're in markets, United States personal banking, services like wealth management. So yeah, they're like a financials play. And look at the net income. Wow. This is after tax. They made 4 billion the most recent quarter. I mean, they're making in a 3-4 bill a quarter. So I love the net income they're making. Pretty good bank. Can you do OSCR? Yeah, so Oscar Health. This right here is being affected right now because of the new regulatory environment of Medicare and Medicaid. So basically, all this company's revenue comes from like Medicare and Medicaid. They have one of the most impressive like growth rates for a company I've ever seen. But the darn government had to step in and start affecting their business. That's kind of why they gapped down this day and have been down ever since. But we're going to put that aside. We're going to forget about that for right now. I'm going to show you why I love this company. I'm kind of obsessed with the growth here. I mean, look at this. In 2020, revenue was 590 mil, but for the full year 2024, it was 9.2 billion. I mean, you can see the growth there. Literally just in the most recent quarter, it was 3 billion. So incredible there. And they're making net income too. It's a little choppy, but it's getting better. What was the last company you just saw with the numbers? Let me go double check. I forgot. Oh, that was ticker symbol C. I think we're talking about Citigroup, ticker symbol C, as the bank with the nice dividend. Did you say Rocket Lab? Yeah, Rocket Lab. Well, look at them. And Autodesk. Yes, Prince. Let me know if that was the stock I was talking about. Yo, Michael, we'll look at Autodesk after this. So here's Rocket Lab. Yeah, this company just acquired another company for like 600 million, which is going to help out their growth even more. So yeah, if we go to this down here, that's my favorite space stock, space play. Look at this. Their space systems revenue actually grew 45% from the previous year. So that's incredible growth of their revenue. And with this new acquisition, it's just going to be even higher. And also this company has a huge backlog, 1.5 billion of orders that they haven't fulfilled yet. So that is why the stock's at all-time high, in my opinion. Wait, let's look at ADSK. Then we'll look at NVO. That's Novo Nordisk. Yeah. So here's Autodesk right here. And hey, Flix, if you want to get this is for the YouTube stream. Oh my goodness. Hold on. There we go. So yeah, if you want to get this app I'm on, it's right there. Flixie, it's in the link tree in my bio, first link there. It's a brokerage. Anyway, here's Autodesk right here. Let's see. They did fall. Look at that. Their most recent candlesticks, they fell like crazy. I wonder if there was some like specific news around that. But let's see. Architecture and engineering, AutoCAD, manufacturing. So let's see. Oh, so look at that. America isn't really, the US right here. Okay, so the US is 36% of their revenue. Let's see, net income right here. Yeah, look at that. The net income fell 39% from the previous year. That might be why the stock fell. I don't know, but there wasn't earnings on that day, so might just be momentum. But Is that a one? Yo, that was a one-time adjustment anyway. I love this company. Everything's looking good. They're making a bunch of net income. They're growing very nicely. Like, yeah, if we go to the revenue, it's up double digits. It's up 15% year over year. Operating profit was up 13. So yeah, I like that one. No dividend. Yeah, yeah, I like Moomoo. All right, so let's see. NVO. So this is Novo Nordisk right here. This is your weight loss play. So they own Ozempic. If you've heard of Ozempic before, it's like that weight loss prescription. Elon Musk is on it. So let's see. Novo Nordisk, yeah, so look at that. 95% of the revenue is from their diabetes and obesity care products. So 95% of the revenue is Ozempic, basically. And look at this money they're making right now. I mean, it's crazy. They're making 3 to 4 billion in net income every quarter. This is after-tax money. They're also a European company. Also, the dividend, they're a nice dividend play. They have a 2.33% dividend, so that's great news. Now, there is one thing you should know, and I think that I don't know why the stock has been hurt so much, but it might be this. They also just ended their partnership with Hims, that stock, but their patent for Ozempic expires in 2027. So that's one thing that's not great for MVO, but still, I do really like that one. I think the risk to reward actually looks very fair on MVO. So let's see. Oh, CoreWeave. So yeah, CRWV. What up? Actually, let's go to NVIDIA's portfolio. So as we know, NVIDIA is so big that they literally own some individual companies. And here's NVIDIA's portfolio. Their largest holding is in CoreWeave. It's 90% of their portfolio. And dang, whoa, look at CoreWeave. It kind of just dumped, starting to puke. It looks like it might want to go to under 100, but let's do some analysis on them. First off, NVIDIA is a big shareholder. You know, they're buying the dip on this one in the $40 level, but they did just IPO, so there's not too much history behind this one. But here's the little history we do have. Look in the most recent quarter, 981 million of revenue. It's up 420% from the previous year. So that right there just shows this is a really growthy company. The revenue is up 420% year over year on CoreWeave. So, you know, that growth rate, what's it going to be that this time next year? So that's really, really impressive. All right, so let's see here. Grab Holdings. Oh yeah, remind me to look at Grab. But Andrew said SMR stock. So this is your small nuclear play. They actually, let me go to the nuclear stocks right here. So here we go. Nuclear watch this. Is SMR on here? So yeah, SMR is on here. So yeah, I believe they just got a contract with a company. Let's see. We'll just look at the revenue right here. Basically, this is a huge nuclear momentum play. Whenever the nuclear uranium stocks go up, this one does too. And they finally got a contract. Look at their revenue. It literally just jumped up. You know, it's up. 800% year. It used to be nothing. You know, they had under 1 million of sales. Now they have 13 million. So that's great news that they finally have some revenue, and they've just fortified their balance sheet by issuing some shares. So interesting. My favorite nuclear energy play, though, I will say, if I ever go over here to my Robinhood account, is actually ticker symbol CEG, Constellation Energy. In my opinion, this is the best nuclear energy play. They literally own 50% of all the U.S. nuclear energy reactors. So it's tough to buy them, though, because they're at an all-time high, but that's my nuclear energy play. But I do have exposure to the industry. All right, so let's see. ASO, what up, Gary? So ASO, this is a sporting goods store, outdoor store. So Academy Sports, this is an all right company. You know, the valuation is super cheap. You know, the PE is a 9. They just sell commodity. Like, look, they sell sports stuff, apparel, footwear, so shoes. This is the only concerning thing I have. So the revenue fell 1% year over year. The revenue did fall, but look at the net income. The net income actually fell 40% year over year. So the net income really declined. So I really want to see that start to reverse trend. But they also have a nice 1% dividend, and the payout ratio is only a 7%. Yo, no way. QDog30. Thank you so much for the 9 chili peppers, dude. Yo, if you got a stock you want me to look at, let me know, QDog. I really appreciate you, man. So, all right. Yeah, so I want to see the growth come back to that one, but they do have a nice little dividend. Let's see. Yo, thanks him. Yeah, Constellation was good. Oh yeah, CoreWeave acquired Cores. Yeah, thanks for reminding me of that. So I wanted to look at Zeta. So not Meta, but we got Zeta right here. What's the name analysis up? Yeah, hey, what the it's in the link tree in my bio. It's the very first link in the link tree in my bio. It's actually a brokerage. So if you want to get this software I'm on, first link in the link tree in my bio. It's free. But anyway, here's Zeta Global. This is one I do really like. The financials of I really like. And yo, Bryce, no way, Bryce. Thanks so much for the heart there. I really appreciate you, man, for the rose. So yeah, here's the thing I really like about Zeta is the growth. I mean, the revenue's up 35% year over year. Very nice revenue growth. And if you go to the net income, they're really narrowing their losses. They even made net income last quarter. Oh my goodness, TikTok. Hold on one sec. They're saying I'm AFK. Okay, hopefully I'm back. TikTok just said I was AFK, but I wasn't, but I'm back. Okay, so anyway, here's Zeta right here. I love that they're getting very close to net income positivity. You know, this time next year, they're going to be making net income every quarter, and they're really fortifying their balance sheet. So everything about Zeta, I like. I really do. So KOG, this is a European military stock. Let me know if you're talking about KO Gold. I don't think this is the one you're talking about because the market cap is 3 million. I don't know if I can find that one. I do apologize. Um, can you check VRSK? Yeah, what's this one? VRSK stock. So very I don't know how to pronounce it. Analytics. So, wow, huge company, $42 billion market cap. Let's see, man. This has been a monster of a performer. So they're an insurance company, okay. And look at that. The revenue just like goes up high single digits every year. So this is really good, the growth there. Yeah, revenue's up 7. And look at that net income they're making. Geez, what are the margins, 30-40% net margins. Insurance is so profitable. So hey, if you want exposure to insurance, VRSK could be a good one. What country are they from? I don't know if they're a U.S. Where are they headquartered? Let's see. They are headquartered in America. Okay. So the Grind said a company that has actually made a lot of money, or I'm all in on Hood. Yo, I also own some Robinhood stock. And I will show you that real quick. I do own that one. It's been one of the best performers in my portfolio. Geez, I shouldn't have sold. I took a lot of profit on Robinhood when I shouldn't have. But yeah, if we look at Robinhood, I'm up 603% on them. And look, we sold 50 shares at $36. I sold it at like a 3x, and then it just keeps on going higher. So yeah, Robinhood has been crushing it. I don't own many shares left, but here's why. I mean, they're definitely overvalued. I wouldn't be buying this one at over 100 really, or it's at 98 right now. But the growth has just been really good. The revenue's up 50% year over year. Very nice revenue growth. Net income as well. I mean, look at that. They're making over 100 million of net income a quarter. Very nice net income growth. When if you zoom out, look at this. It was hard to buy Robinhood stock back here. They were actually losing hundreds of millions in net income a quarter. So yeah, people are really starting to take them serious. And Robinhood, if you don't know, is just this brokerage right here, this app. They've had so many like innovative products, like the Robinhood Gold subscription's really good. Like you get the 4% APY, the IRA match. Yeah, these are all the benefits. I don't really use any of these really, but the 3%, the IRA match is the best part. So yeah, look at this. If you look at my Roth IRA here, in the middle, I deposited $730 and they matched me $21.90, which is pretty cool. So that's like an instant return. If you wanted to, okay, so yeah, anyway, I do like Robinhood. All right, let's see here. Grab, yo. Oh yeah, I wanted to look at Grab. Yo, let me go look at Grab real quick. So, and then we'll look, yeah, if you guys got any stocks I'm gonna look at, let me know in the chat. I'll check them out for you before I end the stream. I'll get to all of them, especially on the YouTube chat. Oh yeah, we'll look at AMBA. Yeah, Flex. I'm sorry I couldn't find that company. I wonder what happened to it. So yeah, here's Grab Holdings right here. This is Uber's competitor. But here's what they do. They literally do exactly what Uber does. Deliveries, mobility, share riding, whatever. They do exactly what Uber does, but in all these other countries. Like notice US and Canada aren't on here. There's Malaysia, Indonesia, Singapore, Philippines, all these other countries. US and Canada isn't on there. So this is why it was genius for Uber to be the largest shareholder. Look at that. Uber now owns 13% of Grab. And if we look at the third largest shareholder, Toyota, is 5.5% of the shares, or they own 5.5% of the shares. Anyway, they have a monster balance sheet, no net debt. I know they got a lot of cash. So it was genius for Uber to buy this company. And I think this is a good standalone investment now that it's kind of backed by Uber. So yeah, that's cool. So AMBA stock, let's see. Oh, this one's on my watch list actually, and I don't remember this company. So let's go check it out. Let's see, Umbrella right here. Development and sales of low-powered artificial intelligence-based processing and video image. Well, anyway, I just like looking at the growth here. Look at that. The revenue is up 57% from the previous year. So that is really good growth. That grew 58% year over year. And they're not net income positive, so they're still losing money every quarter, but the trend is getting better. They lost 35% less net income than they did 1 year ago. So that's good news. So yeah, I just like the growth here. Revenue's up 57. Oh, and look at the balance sheet, dude. That's probably why I put on my watch list. Like all that and this balance sheet, they have $260 million of cash. So 260 million of cash and no debt at all. What was the market cap on this one? 2.8 billion. So yeah, literally 10% of their market cap is their cash on hand. So hey, that's why I added that one to the watch list because the growth there. So hey, you called Robinhood overvalued. You sold at 36. No, I sold at 56. But I still own Robinhood shares. Let's see, FTNT, Fortinet stock. So yeah, dude, Fortinet, this is the cybersecurity play. I really like the cybersecurity industry. You know, it's going nowhere. You know, as AI gets better, hacking will get better, and we'll always need Fortinet. So check this out. I love subscription model companies, and look at this. Their security subscription is 41% of the business, and look at the growth here. It has seen incredible growth. Like if we go to on an annual basis, I mean, this is what you want to see. Like if you're just going to trust your money, buy and hold a stock forever, hold it on for the long run. Like you want to make sure it has good growing fundamentals, and Fortinet checks the box for me. So yeah, so security, you know that security subscription, it's all reoccurring as well. Let's go see, are they net income positive? So yeah, look at that. Wow, the net income grew 44% from the previous year. They're literally making close to 2 billion of net income a year. So that's incredible bottom line profits that Fortinet's making. They're deleveraging. Wow, they've really deleveraged since the previous year. So everything about Fortinet, I can see why this stock has performed so good, and I can see why they're at all-time highs because the fundamentals are really strong there, in my opinion. Yeah. Um, let's see here. Oh yeah, Lyft. Yeah, hey, Lyft. This is like a competitor to Uber and like DoorDash. So Lyft has been like the big loser. They haven't really gone anywhere since their IPO. So let's see. If we go to the free cash flow, I know the free cash flow is crazy. Yeah, look at that. The free cash flow doubled. It's up 120% year over year. So really nice free cash flow growth. But the reason the stock has been struggling so much is because they were struggling to get net income positive. Good news for them though, they are finally net income positive. Like they made 61 million last quarter. 2.5 million the most recent quarter. So they're finally making net income, which is great news. Because look at this back here. This is why the stock like fell so much and really hasn't recovered because they haven't really recovered this. They were literally losing, look at this, like 400 million of net income a quarter. So they finally reversed that. And also I heard there was a little rumor, this would be genius for Tesla. You know, for Tesla to acquire Lyft would be absolutely really smart. Oh, hey, yeah, hey, Flex. So he said in U stock, this is a company I really like. Even Warren Buffett and Berkshire Hathaway, you know, I don't know if it was Warren Buffett exactly, but Berkshire Hathaway actually owns some of NU Holdings. And what is this stock? Well, this is actually a crypto bank out of Brazil. And if you don't know, that's where Bitcoin and crypto is really popular. Look at that. If we go to where the revenue comes from, 93% of it comes from Brazil. So it is not like an American play. 140,000 revenue from the United States. So they're a crypto bank out of Brazil. That's where crypto is most popular because the currency sucks down there. And look at this right here, the after-tax net income. This is why I think this is a stock you should own. And, you know, not financial advice, you know, it's a weird country to be in, but look at this after-tax net income. I mean, 550 million the most recent quarter, up 47% year over year. I mean, this net income hits a new record every quarter. So I just love the growth of the net income. You get exposure to crypto, and the sales are up 19% year over year. So really good growth of the fundamentals there. So I do really like that one. And yeah, hey, someone said SITM stock, or I'll check that one out. What up, BTs? Probably saying your name wrong, and I do apologize. But here's SITM stock. So hey, yeah, pretty good market cap. 5.4 billion or $5.3 billion company. Let's go see what they do because I've never heard of this company. So design, development, and sale of precision timing solutions to the global economic electronics industries. Well, anyway, yeah, you're right. The growth is really good. The revenue from the previous year is up 83%. So that is really good growth. Revenue is up 83% from the previous year. And let's see the net income. Are they profitable on that? So they are still losing a bit of money. Yeah, look at that right there. They're losing 20 million a quarter, but the trend is getting better. And I love the growth there. They'll kind of outgrow that. Oh, yeah, look at this balance sheet too. Monster of a balance sheet right here. Looks like no debt on this company. Yeah, cash from operations has exploded. Largest shareholder is someone called Megachips Corporation is the largest shareholder. So SITM, very interesting. Let's see here. Hey, yeah, thanks for the follow, brother. So FIX stock, yeah. So this is my largest holding. I don't know if you saw it from here, but if you heard of this stock on your own, I'm impressed because no one's really heard about this stock before. But they're my largest holding for a reason. This is Comfort Systems. They literally repair, service, and maintenance HVAC. So ventilation, cooling for data centers for everyone really, but they've seen a lot of growth recently from Bitcoin mining rigs and data centers because they really need to be cool. They literally install the piping like straight in the chips. Like it's better than water cooling. Anyway, Comfort Systems, if you look at the price of it, it's really followed Bitcoin. Weirdly, like this stock really follows Bitcoin. But anyway, the margin expansion is the reason I own this stock and the great fundamentals. So look, the revenue is up 19% year over year. Really nice growth, 19% year over year. But look at the net income. The net income is up 75% from the previous year. So what that means in English is that they're really growing their net margins. And so they now have a 9.3% net margin. Incredible. They also raise their dividend every quarter. You don't really see that. Sometimes a company will raise their dividends every year. Well, since this company has such a low payout ratio, they raise their dividend every quarter. Look at that. The most recent quarter, the dividend was 45 cents, then 40, 35, 30. So anyway, just a very shareholder-friendly company. They're also doing buybacks. They buy companies for synergistic M&A. I mean, I've done too much research on Comfort Systems, but yeah, I do really like that name. Oh, hey, MP Materials. Yeah, this one just got a huge deal from the U.S. government. So this is a rare earth minerals mine. Basically, the one mine that they want to open, like I forget the exact number, but it was something like this. This one mine that they own. The United States uses like 1,000 tons of precious minerals a year, and this one mine that they want to own has like a million. Oh my gosh, I'm fumbling the numbers. I don't remember, but basically, great deal. The U.S. government is helping MP Materials do this, so that's kind of the momentum right here on the huge gap up. It's great for the company. It's really good news. It's a rare earth precious mineral company. So, let's see. DTTS. Can you check the news section for the recent contract? Or DTSS stock. So, yeah, I got you. So this is Data C. If you go to news, I'm not seeing Data C subsidiary awarded 100 million in service contract. I don't know if that's them. So this is bad news. So this one looks really risky on this because look, if you look in the top right, the market cap is 15 million. Oh, hey, Sid said, make a video on a penny stock that could be a multi-bagger. Yo, Sid, if you go to the very beginning of the live stream, it's a company called ticker symbol DCTH. I'm going to make a video about it soon, but if you want to know a real stock that I believe is going to be a real multi-bagger, it's called DCTH. And go to the very beginning of the stream. They have no debt. 30% of the market cap is cash, growing like a maniac. Now net income positive. Like everything about the company I love. $400 million company. Anyway, let's go back to this company. So here's one I'd stay away from. Or I'll go over it. Tell me if you want me to go over that stock again. I'll do it for you. So this is a $15 million company, very small market cap. So the whole company, dang. So this stock is at an all-time low. The whole company is worth $15 million, and they lost $1.7 million in the most recent quarter. So actually, good news. The revenue is growing. That is really good news. But it's tough to trust this company with a lot of money. It's such a low market cap. Okay, so yeah, let's look at MNDY. So here's Monday.com. This is a great software play, and they're now extremely profitable. $15 billion company, pretty good market cap on that one. So yeah, check this out right here. If we go to the revenue, really good growth. Revenue's up 31% year over year. It kind of just hits a new record every quarter. Look at that. It goes up 30% every quarter, and they're making net income. They had a little one-time adjustment. By this time next year, they'll be making net income every quarter, but they're finally net income positive. making 20, 30 million in net income. So I do actually like Monday.com. Yeah, I do want to do a little more research on them. I don't know the valuation or anything. Someone said Affirm going down 60 basis points. Oh, and someone said, what stocks pay highest dividends? I'll show you my highest paying dividend after this. Yeah, so here's Affirm. This is the buy now, pay later stock. I don't know if anyone's ever seen like on Amazon, like, hey, buy now, pay later with Affirm, buying for pay. I don't recommend people do that, but because if we go into a recession, this stock's going to get smoked. I mean, people just won't pay back those loans. And this is your buy now, pay later play. And check this out. They originate the loans and then they sell the loans too. But look, the revenue has seen very nice growth, 35% year-over-year revenue growth. The net income, they're finally making net income. I mean, this used to be a huge money loser. Look at that, losing a couple $100 million a quarter. But now, most recent quarter, they made 2.8 mil. Last quarter, they made 80 mil. So right now, the fundamentals are looking great. They're finally GAAP net income positive, and they're making free cash flow every quarter. So I can see why they've done so good. Wow, hold on, I didn't know that. Hold on, look. Shopify is the third largest shareholder. I think you can buy now, pay later with Shopify, but I did not know Shopify was the third largest shareholder of Affirm. That I did not know. So, said I hold ULTY dividend for a week. So yeah, ULTY. This is a covered call ETF. So yeah, you basically, dang, look at that stock price. So yeah. You only buy this to maximize your dividend income because you're not going to outperform the market in the long run with this kind of ETF. Because look, the dividend yield says it's 135% dividend yield. It's just hard to trust that, So you buy this to maximize your dividend income. You don't really expect to outperform the market because they pay like a monthly dividend. And here's my highest yielding play. I actually own a monthly paying dividend stock. If I go over here to my Roth IRA, check this out right here. So yeah, I own 10 shares of ticker symbol MAIN at Main Street Capital. This is a BDC. A BDC is a business development company. All that means is literally by law, this company has to pay out 90% of their taxable income in the form of a dividend. So that's why their abnormally high dividend yield is actually sustainable. They don't pay qualified dividends, so that's why I own them in the Roth IRA. They also, look at that, I got a little pending dividend, $2.55. I only own 10 shares, obviously, but they pay you 25 cents per share a month, and my 10 shares pays me $2.50 a month. So hey, if you buy 10 shares of this stock, $630, you get $2.50 back a month, which is pretty cool. So let's see here. RBRK. Oh, and GameStop. Yeah, dude, GameStop, I'm surprised. 60% of their market cap is just their cash on hand for GameStop, besides all the meme stock shenanigans about GameStop. But we'll talk about them later. Here's Rubrik right here. I think this is a software company. Yeah, look in the top right, a $16 billion company. So, hey, that's a pretty decent market cap. Let's see. Financials. Let's go look. Software and services. So, it's not going to load. Oh, well, that's right. Actually, let's see what the analysts are expecting. So look at this, the orange line there. The orange line is what the analysts were expecting. And look, they keep beating every quarter on their revenue. So they keep beating on their revenue like crazy. They beat on their net income and on EBITDA. Dude, they had a triple beat quarter. So they're really crushing the analysts' expectations. Yeah, wow. Look at the revenue growth. The revenue is up 48% from the previous year. They're still losing money, like $100 million a quarter, but the trend is getting way better. Yeah, I said, guessing you're more of a fundamental trader investor. Yeah, man. I love looking at the fundamentals of a stock because that's really how I judge a company. I also own a lot of risky plays, like a Robinhood, SoFi, Supermicro, Reddit. But, with these smaller positions, you can't have it as a huge chunk of your portfolio. You keep them as small positions and then watch them grow. So, yeah, let me look at GameStop real quick, just because I wanted to share this. This is the only thing I like about GameStop. The reason this stock fell right here, because I think it was the day after earnings. I think they diluted the shareholder a bunch. But this is how this company has so much cash. So remember, the whole company is worth $10 billion. So the whole company is worth $10 billion. And they have $6.4 billion of cash and no debt. So this is a debt-free company with $6 6.4 billion in cash. So that's the only good part about GameStop, in my opinion. And since they have so much cash and no debt, this is what's kind of cool about the high interest rate environment. They're actually making a bunch of interest on their cash, and that's how they're making net income. It's literally from the interest on their cash. It's not real net income. But that's the only thing I like about GameStop, because the if we look at the lifeblood, the revenue of the business, this is really bad. Look at this. The revenue's down 17% year over year. They sell that. No, so basically GameStop, there used to be, like, let's say there were only 1,000 shares of GameStop that existed. They basically issued a bunch of more shares. They diluted everyone. They gave everyone less ownership of the company, but rose cash that way, and it really fortified their balance sheet, saving them from any bankruptcy risk. So GameStop, 65% of their market cap roughly is just their cash on hand, which is crazy. And I think they also just bought a little bit of Bitcoin. I think they bought $500 million of Bitcoin. So, all right. So let's see here. They sold notes, not shares, or I don't know. I just know if you go to the diluted weighted average shares on GameStop here, let's actually check that. So I want to see how much they diluted you. We can just check this for fun. I mean, why not? So yeah, GameStop, $10 billion company. Again, not a stock I own, or probably, it's out of all the meme stocks, it's not the worst. But yeah, if we go to the diluted weighted average share, so yeah, look at this. This is bad news. It's on the very left. So exactly 1 year ago, there were 305 million shares. Now there's 500 million shares. They diluted their shareholder by 62%. So you own 62% less of the company than you did 1 year ago. So look, that also explains how they get $6 billion of cash, because they didn't get it from the business. They just diluted the crap out of the shareholder, but it fortified their balance sheet. And if we go, look, remember, there's 6.4 billion of cash. Where's debt? Let me find debt. So they do have some debt. So they just issued debt. That's weird. I didn't know that, because they used to have no debt, 16 mil, but now they have $1.5 billion of debt. Interesting. Anyway, or yeah, maybe it was no time. Oh, well. All right. So they sell the debt. Oh, for a firm. Yeah. So they do sell some of the loans that they buy for a firm. So that is really interesting. So let's see here. AMD stock. Oh, yeah, we can look at AMD again. So this is one that I do own. I might be a little biased. They have underperformed NVIDIA, because if you look at NVIDIA is literally at an all-time high right now, but AMD is not at all-time highs. You know what? Let me look at NVIDIA real quick. If we go to the mega caps, look at the market cap of NVIDIA. They're worth 4.02 trillion. Microsoft is 3.7, Apple 3.1. Hey, Meta's coming up for Google. Meta has a 1.8 bill, or trill, sorry. But let's go look at AMD right here. Oh yeah, we'll look at S&PS. So AMD, here's their PC GPU market share. They actually have a 17% GPU market share, kind of huge. And this is really a data center play. 50% of AMD's revenue literally comes from their data center business, and the data center revenue is up 57% from the previous year. So that's very strong growth for AMD. Also, if we look at the FCF, which is free cash flow is up 91% year over year. We go to the net income, it's up 400% to 700 mil. They also have a monster balance sheet, no net debt. They have a bunch of cash, and other cash is earning interest too. So I do like ULTY is fantastic on margin to pay down the loan. Oh yeah, like that is a good point. With ULTY, you get like a 30% dividend or something. Well, I first off, I never really recommend taking out margin, but you take out a loan and you have to pay 7% on the loan. You just take the loan and put it in that, and you make the difference of the yield. I get that. So here's SNPS synopsis. So if you look in the top right, they're a big company. Yeah, let's do some analysis on synopsis. So $86 billion company. They've done pretty good since this April dip from 360 to 560. Wow. So no dividend on this company. That's all right. Morningstar has it at 550. Analysts have it at 602. So let's see. Design automation. Hey, so they're growing single digits. Not too bad. I mean, the business is growing. What about their digital intellectual property? So that's up 20% year over year. So hey, that's some good growth. What about the net income? So yeah, they are net income positive. Look at that. They're making 300 mil to $1 billion a quarter. Yeah, look at that one quarter. Was that real? So it wasn't real, but still, they're making 300 mil of net income a quarter. Very strong. And look at that balance sheet. Whoa. Did they just buy a company? Let's see, cash from investing. Oh, well, they sold off a business. They sold off a segment of their business. Maybe that's why the growth is slowing. They sold off a segment of their business to. I don't know. Anyway, the net income's crazy strong, you know? I do like them. So NCR said, can we do Neo? So, yo, I'm going to give you my honest thoughts on them. I feel bad if you own this company because the financials aren't good here. So, um, here's the truth about Neo. And the stock's at an all-time low right now when the market's at an all-time high. Here's why. First off, they're a Chinese company, so I don't really love Chinese companies, but this is the terrible news. They literally in the most recent quarter lost 930 million. I mean, they pretty much lost 1 billion of net income just in the past 3 months. And the 3 months before that, they lost another $1 billion. The trend isn't exactly getting better. They're losing billions a year. And let's see how much the whole company's worth. The whole company's worth 8.7 billion. You buy the whole company for 8.7 billion. You buy a company that loses a billion a quarter. I mean, it's a tough. I can see why this one's at all-time lows, why the market's at all-time highs. So I feel bad if you own that one. The fundamentals just aren't good there. You're really hoping they can, start turning that around and get to net income positivity. Again, I'm not an expert. This isn't financial advice. I just try and show you the numbers for yourself. You can draw your own conclusion. I sell nothing. I don't have a course, a book, a Discord, WhatsApp, Telegram. Watch out for people impersonating me. I just enjoy this. And if you want to help me out, hey, hit the like and the subscribe button. So let's see. Can you do analysis on Tesla? So Tesla, it's tough as well. We kind of just looked at Neo. Yeah, hey. So here's Tesla right here. This is another one that's kind of been struggling recently. The valuation is really high on Tesla because of the future growth. This is like if you look at the PE is 179. So that's a really high valuation for a company. If we look at their total vehicles delivered, the total vehicles delivered have actually declined. It's actually down 13% year over year. So we can see like the deliveries by model and stuff. But yeah, if we go to the automotive segment, which is 85% of the revenue, it's actually down 16% year over year. So the business has lost all growth. But then where's all that high PE coming from? It's supposed to be from the future of robo-taxis and those robots and stuff Tesla's supposed to make. But it's just, in my opinion, hard to pay that premium right now. And after the margins kind of just collapsed. Look at this. So the revenue's down 9% year over year on Tesla, and the net income's down 70. So the margins are really getting hurt here. So financially right now, Tesla does not look like a good buy. But again, it's like that future expectation. It's also Elon Musk. This is a huge momentum play. So it's more than just me looking at financials. So I wish I'd give you more thoughts on them. I don't know if that was too helpful, but yeah, why did all the payment companies fall so hard on Friday? PayPal, Affirm, yeah. So also Dave Sezzle. So here's another fintech right here. Ticker symbol Dave. They probably look just like your stock. Look at them in the past couple of days, fallen off a cliff. Very unfortunate. And here's another stock I recommend that everyone, again, not financial advice, in my opinion, put this stock on your watch list. This company is one of the top 5 most impressive companies like I've seen like in a long time. This is ticker symbol SEZL. And look at this one as well. They're in the fintech, financial tech space, and they've also fallen recently. Here's what I love about Sezzle. Y'all won't believe this. Like, this is my favorite thing ever. The revenue is insane. The growth is insane. First off, the revenue is up 123% year over year. So the revenue is more than doubled, but they made 104 mil of revenue and the net income was 36 million. So 36 million of after-tax net income on 104 million of revenue. The margins are insane. A 34% net margin on this company. That one quarter was a 50% net margin. So anyway, everything about this company is insane. They're deleveraging like crazy. So I love SEZL stock. That's another fintech one. So yeah, hey, let's look at PayPal though. PayPal, actually, this is a buyback machine. You won't believe. So PayPal, the business is slowing down. The growth of the revenue is slowing. I think it might have even been negative. You know what? We'll just go double check real quick. Dang, this app does not want to load. Maybe we'll go back to Moomoo if, I wanted to show you this real quick. Yeah, so here's PayPal right here. So if we go to the revenue, yeah, so look, the revenue is up just 1% year over year. So revenue is up 1% year over year. That's why this company trades at like a 17 PE. But here's honestly the best part is the stock buybacks they're doing. This number right here, you want it to be negative. They literally spend $1.5 billion of net income every quarter buying back their own stock. So if you go to the total common shares outstanding here, this is incredible. You own 7% more of the company than you did 1 year ago. So if you look in the bottom left, there are 979 million shares that exist right now. Let's go back to 2019. I mean, there were 1.17 billion. Now there's under a billion, only 980 million. Anyway, this is a buyback play because look at the net income. I mean, they're making just over a billion in net income a quarter, then they're spending it all on buybacks. So anyway, that's what I like about PayPal. Um, have you seen RZLV? Wait, let's see. RZLV is partnered with Google and Microsoft and recently secured $70 million annual recurring revenue. So let's check them out right here. So I don't love this stock price. So yeah, very small company. The whole company's worth 630 million. So extremely low market cap. But yeah, they had some like gap ups right here. Maybe that was that news. Maybe that's why they gapped up. But let's go look at the financials here. So um yeah, so for right now, yeah, he says, I hope that's true, Celebrate, because I don't know. I need to do some more research. But for right now, for the entire year of 2024, for the full year of 2024, the sales were 180,000. I mean, that's really low. And in that same year, where the revenue was only 180,000, they lost $170 million. And the whole company is worth 600 million. That's devastating. That's why the stock fell so much. But here's someone saying the future is going to be really bright with the. I gotta wait for that revenue, so I would wait to buy that one until I see some real revenue. Just in my opinion. Do you recommend investing in government bonds? Yeah, hey Sid, ticker symbol TLT is one I really like. U.S. 20-year Treasury bond. Literally, as interest rates go down, if interest rates go to zero, this will go up. It's like the inverse. So TLT right here. This is just bonds. This is what moves everything. So it's just the US 20-year Treasury bond. And the yield right now is a 4.47%. So you get a 4.47% dividend yield. And if when interest rates go to zero, this will be over $100. I mean, or well over $100. I mean, and in 2020, when interest rates were zero, they printed money. I mean, this was $160. So it could go back there in one day. So that it's just government bonds, you're not going to outperform stocks, you're not going to outperform the stock market with bonds, but it doesn't pay qualified dividends either. But you get exposure to bonds. I think a small percent of the portfolio should be allocated toward bonds to get the yield right now. And the stock price appreciation for when interest rates go down, you get the appreciation of the bond. Like it's a lot better than a money market fund. Like if you like in the middle of my screen right here, I get a 4.10% APY, but I don't get the stock price appreciation of the bond like you do with TLT. And that's all this company does. I mean, I earn 4.10% APY because this brokerage just goes and invests that money into the 1 to 3 week treasuries. And anyway, CRM stock. How do you short some stocks? I don't short any stocks. You should just buy puts if you're really trying to just like short something. But I will show you a ticker symbol I like. Oh, I forgot I got my tea right here. And it's completely cold, dude. I literally warmed up some tea for the stream and I forgot it's here. And it's how far are we into the stream? An hour 40 minutes, so it hasn't. Okay, oh well. Hey, we'll probably end the stream here in a little, but if you guys got any last minute stocks you want me to look at, let me know. I really appreciate y'all being here. And if you enjoyed this, make sure to hit the follow button. We're going to be doing a huge stream tomorrow. Sundays are always my best streams. And tomorrow, we're going to be doing a fire of a stream. So if you want to hit the subscribe button, I'd really appreciate that. And best way to support me, I don't sell anything. I don't have a course, book, Discord, WhatsApp, Telegram. I don't sell nothing. Watch out for people impersonating me. All I ask is that you watch my most recent YouTube video. Just made a video about 3 stocks to buy now. Anyway, let's look at Salesforce right here. This is a software company. And they've kind of been struggling recently. And I think it's just because of the slower growth. Yeah, look at that. Salesforce is the same price it was back in 2023. So I love how diversified that they are. I'll say this first. So look at this. They're in services, sales, or let's look at this. Services revenue. Let's look at it on an annual basis. I mean, look at that. It hits a new record every year. So the service revenue's at a record. Let's go to the sales. The sales, same trend. New record every year. Platform, another, at a record. Integration and analytics at a record. So everything about Salesforce is growing, but the growth has slowed a little bit. Like if you go to the FCF, free cash flow year over year, the free cash flow only grew 3.5% year over year. So the free cash flow only grew 3.5. And if we go to the net income only went up by 0.5. So we're seeing a little bit of slowing growth there, but still, I love Salesforce. They're a buyback machine. They're buying back a lot of stock. Hey, yeah, Mark Benioff is the CEO. He owns 2.3% of the stock. But I do really like Salesforce. Like they own Slack. If anyone's heard of Slack before, some really good assets. So yeah, Salesforce, I did used to own them. Um, they have like the number one market share for like customer relations. Yeah, CRM basically. So someone said FUTU. So yeah, FUTU stock. I do own this one. This is one of the fintechs that have been crushing it. So if you're wondering what is FUTU stock, what is FUTU? That's literally this app right here. So this app that I'm on right now, this is them publicly traded, ticker symbol FUTU. So they are a publicly traded stock, and I've decided to buy them because I love the platform. And more than that, I love the growth of the business. So first off, we can see how many users are on here. And hey, yeah, by the way, if anyone in the chat wanted to get this app I'm on, it's free. It's my favorite brokerage. Go to the link tree right there. It's the very first link in the link tree in my bio. You get Moomoo. It's an affiliate link too. So if you deposit $100, we'll both get some free stocks. But yeah, this app has 26 million users. What are their client assets? Our client assets are at 106 billion. That's crazy. Anyway, yeah, so half the revenue comes from brokerage commissions. How's that doing? Wow, it's up 114% year over year. And if we go to the interest income, it's up 53%. That's what's great about the high interest rate environment. These companies earn a lot of interest on their cash. And look at this, the revenue's up 82%. That's incredible growth. The revenue's up 82 and the net income's up 108. So the net income has doubled on FUTU stock. And they just did a special dividend. If we look at the dividend right here, they just did a special $2 dividend. Since they're making so much money, they don't pay a normal dividend. That's what this little dot is right here. That's the special dividend that they did. So anyway, I do own this one. It's a little tough buying them up here at 150 all-time high. But yeah, I love this app right here. This app, there's so many cool features. Like you can view all the super investors' portfolios, like Warren Buffett, Nancy Pelosi. These are all super investors by SEC law. They literally have to reveal their entire portfolio. Like Nancy Pelosi, her largest holdings are Amazon, Google, and Salesforce. Look at that, 10% in Salesforce, Microsoft, Nvidia, Netflix. So hey, Nancy Pelosi's on the sale, and we can literally see all her like exact moves. So, and that's just for Nancy Pelosi. There's so many other ones like Kathy Wood is on here, Warren Buffett, and the Nvidia portfolio. Nvidia owns a bunch of companies. Oh, yo, David East, what's up, brother? Let's see. He wanted me to look at before I go. ROK stock. Let's see. ROK. So this is Rockwell Automation. Let's check it out. Yeah, hey, they're creeping up on an all-time high. So hey, congrats if you own them. They've had a really nice rally ever since they reported earnings that day. So they pay a dividend as well. So even if you buy the stock right now at an all-time high, you still get the nice 1.5% dividend yield on ROK. And let's see. So they sell intelligent devices. How's that doing? So that business did fall 8% year over year. What about software and control? That fell 0.1. Life cycle services fell 7. So the business fell, but sorry. There was some really good news on earnings, though. So it wasn't the earning. Maybe it was like a forward guidance. Maybe there's some partnership or something they announced. So, first off, they're printing money. Look at that. They're making easy 250 million of net income a quarter. It did fall 6% year over year, but that's just because the business fell 6. They're holding up their margins very strongly. I will say, yeah, they're holding up their margins. They're 12, 13% margins. So I got to do more research on this one because there was some good news that sent the stock up so much. And let me go check. Maybe they did beat on earnings expectations. So, yeah, they beat on revenue, they beat on net income, and a huge beat on EBITDA. So it was just it wasn't as bad as analysts kind of expected. So that's really interesting. Here we go. UCU stock. I think let me know if you're talking about Ucore Rare Earth. He says the wind is to their backs with the USNCA backlog. So they're a $104 million company. UCU. Okay, it was that one. UCU. Let's go back. So $100 million company. Let's see. They're a Canadian stock. So we'll just switch the revenue to USD just so we can easily understand this. So this is a revenue-less company. This is a startup right now. So if you go to the revenue, it says no data because they've never sold anything. And they've lost a little bit of money, $3.5 million the most recent quarter, but they do have a really good balance sheet. So we really just want to see this company finally start to make some money. That's the one critique I have. We're buying a company with no revenues right now. So I just like to see them finally make some revenue to kind of see what happens next. But yeah, someone said Amazon. Yeah, well, I got you, bro. I'll always cover Amazon. So Amazon, this is such an innovative company, in my opinion. A lot of people know Amazon just for their online stores, but they're way more than that. Actually, I'll show you this right here. 38% of the revenue comes from their online stores. Then they have their third-party seller services. And then the most valuable part of Amazon, which brings the most net income to their bottom line, is actually AWS, Amazon Web Services. They are the largest cloud provider in the world, number one market share, and it's now over $100 billion of annual revenue for them. So that's crazy, first off. And they're also an advertising play. If anyone's heard of Twitch.tv, Amazon owns them. So, and if you're on Amazon, your credit card's already in, you're already in the mood to shop. On Amazon, you can like place ads to be at the top of the result. Like that's the best form of advertising. The customer's already ready to spend. And anyway, a lot of ad revenue from Twitch and Amazon. And then the subscription service like Amazon Prime, Amazon Prime, 7% of the business. Then they're in the physical stores. That's 3.3%. They own 365 Whole Foods. It's like a healthy grocery store. And the real best part about Amazon, is actually the net income right here and the margin growth. So if you look at the revenue, first off, this is crazy revenue, 155 billion in the most recent quarter. So it's just hard to grow that, first of all. But it grew 8.6% year over year. So the revenues of 8%, pretty good, not double digit, but the net income grew 64% year over year. So what that means is, again, huge margin expansion here. They now have an 11% net margin. And if you zoom out, this was a rough business, single digit margin business, and now it's over 11%. And they're more than just, Amazon.com now, cloud service provider. They own Zoox. If anyone's heard of Zoox before, hey, Jeffrey Bezos owns 8.5% of the company. Hey, yeah, thanks, David. Thank you, everyone, for being here. I hope you're having a good Saturday. And stay tuned till tomorrow's stream. Is going to be huge. So and him said he bought VRT dip yesterday off the Amazon news. Really, is there some Amazon news with this company? Let me check right here. So, right next to my house. Oh yeah, look at that. If you kind of just read the very top here, Vertiv more likely to collaborate rather than compete with Amazon on liquid cooling. Hey, and I will say this, next to my house, like 20 minutes away, I drive it by every once in a while. It's a huge Vertiv factory. It has their logo and everything, a huge Vertiv factory next to my house. So anyway, yeah, cooling systems. Yeah, this is kind of like a super microcomputer, I think. And let's go see right here. So yeah, products, 79% of the revenue. Let's see. Look at that. Hey, it's up 30% year over year. So the products revenue grew 30% year over year. Pretty nice. What about the service and spares? That's up 5% year over year. So still, that's a smaller segment of business, but let's see. Net income. Yeah, look at this net income, this bottom line they're bringing. 170 million of net income a quarter. So they're really profitable. They pay a really small yield, but look at how they're raising their dividend. From 2023, 2024, they like 4x'd the dividend, even though the yield is so tiny right now. As the stock price go up, it makes the yield go down, even though the payout's the same. But yeah, VRT, they've been a monster. I think they're a super micro competitor, and I do own some SMCI, and I think that one's probably a better buy, dude. Super microcomputer their margins have kind of collapsed. Hey, we got to get more VRT factories. Hey, yes, sir. So super microcomputer, they do the cooling, servers, and all that as well. I don't know if it's the exact same thing as Vertiv, probably a little different, but this company has been struggling because they also just had a huge $10 billion partnership with Datavolt, so that's why they gapped up on one day. But if you look at the revenue is insane on Supermicro. It's up 19% year over year, but the net income's down 72%. So they're still net income positive, but the net margins here kind of collapsed. I'm not too sure what happened there on Supermicro Computer. So that's the little unfortunate part about that. So yeah. We'll look at a few more stocks here. I saw some, NVIDIA and Apple. We can look at those too. I got you. So NVIDIA right here, this company closed at an all-time high. So first off, congrats if you own NVIDIA. This company is at an all-time high, over $4 trillion market cap. So crazy market cap. And here's some of the stats. I mean, look, PC GPU market share, a 20% market share for PC GPUs. I mean, we kind of expected that. But here's why NVIDIA deserves all the hype that they've had. I mean, this is how the stock 10x'd. In 2021, revenue was $6.8 billion. This is fiscal year, but fiscal year 2025, the revenue was $116 billion. I mean, what other company is growing like this where it hits a new record every quarter? Just in the past 3 months, the revenue was $39 billion. I mean, that's incredible growth, and not just top line growth, but bottom line growth. They literally made 18 billion of net income in the most recent quarter. I mean, look at this. The net income just at this growth rate, what's it going to be this time next year? Monster balance sheet on Nvidia. The free cash flows are growing like crazy. So Nvidia is a beast, man. Jensen Huang owns 3.5% of the company. So, hey, yeah, I can see why NVIDIA's at all-time highs. And like I showed earlier, I'll show you it again. NVIDIA is so big that they literally own some individual companies. Like if you go to NVIDIA's portfolio right here, look at that. Most of their holdings are in CoreWeave, but then they own some of ARM, APLD, Nebius, and WeRide. Yo, stay away from WeRide. This is like a Chinese pump and dump. This is the day NVIDIA took a stake into WeRide on this day. Stock goes to 40, and now it's all the way back down to $8. But let's go back to Apple. I wanted to look at Apple too. So AAPL. Now, this is a Mag 7. It used to be the largest company in the world. Now they're the third largest in the world, taken over by Microsoft and NVIDIA. But check this out right here. This is why Apple is so affected by tariffs, by the way. Did y'all know this? Did you know only 36% of Apple's revenue comes from the US? I always thought it was closer to like a 50%, but I didn't know that. But this is why they're so affected by tariffs, and the tariff fears have really died down recently. But yeah, 25% EU, then China, and all these other countries. But yeah, the best product Apple will ever sell is the iPhone. Look at that. It's 59% or 50% of the revenue. I'm on an Apple iPhone right now. A lot of people are locked in the Apple ecosystem. And then the next biggest segment of revenue is actually the services business. If you go on the App Store, and you go buy like gyms, you go buy Clash of Clans gyms, 30% of the money that you pay goes to Apple as a royalty. It's like a developer 30% basically sales royalty. So basically, they have this high margin services business, and then they sell Mac, 8.4% comes from Mac, the wearables like the AirPods, the iPads. So yeah, Apple also number one buyback company. They spend $100 billion a year buying back their own stock. So that's why Apple never goes down. Well, no, just kidding. But yeah, look at this net income they're making. I mean, this is crazy. 20, 30 billion in net income a quarter. They're a bit of a dividend growth company. I mean, 0.5% yield, very low payout ratio, 16% yield. Like they could double, triple their dividend right now if they wanted to. They just choose not to because they're financially responsible. They also make up for it in the amount of buybacks that they do. Apple does a stupid amount of stock buybacks. Let's see. Smartphone chip market share. I like these stats we get. Look at that. Smartphone chip market share is at 19%. We can see the margins of the services business. Yeah, it's 75%. Yeah, if you go buy anything on the App Store, Apple takes a 30% fee, and that's crazy margins for Apple. So yeah, that's them. That's Zesty. Yo, what up, Silas? How's it going, dude? Or Silas? How's it doing? So thoughts on the MAGS ETF. So yeah, here's MAGS ETF right here. This is the Mag 7 only ETFs. Oh, dang, my phone's sorry, that's mine. Dang, my phone's on 10%. We gotta hustle. So this is the Mag 7 ETF. It literally just owns the Mag 7. So yeah, if we look at the top holdings, it's literally just NVIDIA, Microsoft, Amazon, Meta, Google, Tesla, Apple, Amazon, all the Mag 7. So it's like a pure concentrated way to buy the S&P 500. I think it's called RSP. Oh yeah, RSP. Yeah, so here's the inverse or kind of the opposite of that ETF. If we go to ticker symbol RSP, this is the S&P 500 equal weighted ETF. So if you go to the normal S&P 500, Apple is like 10% of it. Nvidia is 10% of the S&P 500. But in this ETF, every weighting, even Apple, get an equal weighting, or like 0.2, and then it grows. Like Coinbase has been doing really good recently, so that's why it's 0.3, and then they'll slowly reallocate that. It'll go back down to a 0.2, but basically it's just the S&P 500 equal weight ETF. So this is a cool one to add to your watch list. I don't know if I'd be buying this one right now, but this is the S&P 500 without the Mag 7, or it has the Mag 7, but they're all very small allocations. So yeah, I don't that the RSP could outperform the S&P 500 if like the Mag 7s, the mega caps just underperform, which might have, because these mega caps, the market caps are so big. Like Nvidia, for them to double right now, they have to be worth 8 trillion. For Apple to double, they have to be worth 6.3 trillion. I mean, it's just hard for these companies to double when if you go to maybe some of these other S&P 500 companies, like maybe a CEG, Eaton, Salesforce, it's easier for these companies to double, triple, quadruple than, Apple and Nvidia. But that being said, I do love the Mag 7 stocks. I mean, I own a lot of them individually. Like I would own some of them individually, maybe buy the Mags ETF. That ETF would be perfect for me because look, I own Meta individually. I own Google, 19 shares of Google. So actually, every stock in this portfolio right here, this is my dividend growth portfolio, by the way. We're up 8% year to date, pretty good. But this is my S&P 500 only dividend growth portfolio. So every stock in here is in the S&P 500, and also all these pay a dividend as well. So I get it, like Meta, Google, these aren't really dividend names, but they're like dividend growth companies. You're mainly buying them for the stock price appreciation, but the dividend is nice to have. And actually, yeah, so much that Meta, I do want to look at Meta too. Then we'll kind of wrap up this stream. I really appreciate all y'all being here. But yeah, here's Meta Platforms. They own so many apps, Facebook, Instagram, Threads, WhatsApp. They just announced ads to WhatsApp, and it's such an earnings tailwind for them. It's good. They also acquired half of Scale AI. So Scale AI that acquisition is gonna add over 300 million to the quarterly revenue. So they're just diversifying away from all ads, all Instagram and Facebook ads is the majority of their revenue, but they also Threads. Has anyone heard of the Threads app? It's like a competitor to Twitter, competitor to X. It's now nearing the exact same amount of daily active users as X, which is crazy. I'll go on the app. I'll be on Instagram sometimes, and it'll like recommend a thread, and I'll like click it from there. Anyway, look at this net income. It's pretty crazy. Actually, the net income growth compared to the revenue growth. If you look at the revenue, it's up 16% year over year, but the net income grew 34. So yeah, another one that's growing their margins. I can't believe this is a $2 trillion company nearly, and the margins are a 40%. I mean, this is such a great company in my opinion. They also, has anyone heard of Ray-Ban stock? ESLOY. So this is the company that owns Ray-Bans. Meta actually now owns 3%, just under 3% of all the shares. So Meta just took a 3% stake into the Meta Ray-Bans parent company. So it's kind of smart. If you heard of the Meta Ray-Bans, Meta had a huge partnership with them. Why not, if we're going to partner with them and help them out too, why not own some of the company? So it's cool to see Meta take that stake into Ray-Bans. They're a huge France company worth like over $100 billion. But yeah, Amphenol Group. Hey, so this stock, you can't really buy this one right now. It's at an all-time high. And like, hopefully y'all can hear me. Hopefully we're back. Okay, it says we're back. Uh-oh, I'm back. Sorry about that. So back to what I was saying about this company. NVIDIA has this new product called the NVIDIA NVLink Spine. And this product literally uses over 2 miles of copper cable inside it. And they get all that from Amphenol. So Amphenol's main customer, they have massive orders from NVIDIA right now. And okay, so Amphenol Group right here, if we go to this main source of revenue right here, the communication solutions, look at the growth right here. So the revenue is up 43% year over year, the communication solutions. These are these copper wire cables that are very high quality, and it's up 43% year over year. And also, they're a bit of a niche company. If we go to their harsh environment solutions revenue, that's up 39%. They're also in the aerospace industry, so this one has just been crushing it. It's been growing like crazy. So anyway, I do really got to go. I hope everyone has a great rest of your Saturday. And make sure to be here for tomorrow's stream. We're going to be doing an even longer stream. This one was we hit right at the 2-hour mark. So tomorrow we're going to be doing an even longer stream. Sundays are always like my most popular streams. Yeah, Michael, no way. You made it all the way to the end. I really appreciate you, Michael. And thank you, everyone else. Who else is here? Thank you, him. David East, Silas, Sid, The Grid. Hey, no way. Thank you for being here. Or The Gerd. What's up, dude? Hey. Yeah, anyway, hope you guys have a great rest of your day. It would mean the world if you hit the subscribe button and go watch my most recent YouTube video. And I don't sell nothing. I don't have a course, book, Discord, WhatsApp, Telegram. I'm literally just on here giving my opinion, trying to help you guys out.